All right, good morning, everybody. Hope everybody survived the weekend, made it to Monday. It's nice to see you guys. Can you hear me okay? Am I coming through loud and clear? Well rested, ready to play with you guys. How's everyone doing? How was your week last week? Everybody get some great stuff from John Novak? Oh my gosh, I watched all his videos. It's amazing how he says the exact same thing, just says it differently. I think there's consistency in message, right? It all comes from having a set of rules, guys, and that's what we're going to talk about. I will encourage you. Go ahead and throw any questions that you have about what he covered, right? As you reinforce, um, he's brilliant. There's no doubt about it. He's brilliant, but he goes off the assumption that you have a foundation. So we're gonna talk about the foundation a lot in the first hour, the way we always do. And let's get in and let's look at your charts today and let's see what we can do. Um, it's exciting when John teaches the class. I love it. I think it's great. Hey, good morning, Shogun. Nice to see you. Let me start by saying welcome anybody that's brand new. Sometimes when I'm not here for a little bit, I miss some brand new people. So if you're brand new in the room, feel free to raise your hand. Let me know that you're brand new. Thank you, Mike. It's nice to be back. Um, Guys, this class is designed 100% for you guys. It's designed to give you a foundation and then from that foundation build, right? So everything that we do is going to be about patterns and repetition and getting to where you want to be. And the first thing that I do every day is I go to forexfactory.com and I make sure that there's not news printing. And I think that this is such an important thing because if you've ever been caught trading directly into news, you know that it's rarely advantageous. So today we have some low impact news. Chicago PMI coming up from the land of Gary, and then loan officer survey is tentative. I don't know what either of these mean, but what I do know is that news can make the market react. So I'm really looking for these high impact. I'm looking for these medium impact. Chicago PMI probably isn't going to have a big effect on the market today, but if you are inclined, maybe sit on your hands just a little bit, right? Make sure that you're good. Don't trade directly into it. And then everything that I talk about, guys, is going to come from the education page. We've gone to great lengths to make sure that you don't miss out on anything, to make sure that all the information that you need is available. Hey, good morning, Jose Trades. Jose, did you get that PDF? Take a look at it. Did it make sense? And that was, man, it was really just kind of my brainstorming. How do we make NASDAQ easier? And guys, I'll share that with the room eventually, but I'm using Jose as a sounding board. Um, and it kind of goes through with the pictures that I posted this morning, right? NASDAQ requires a level of patience um, to trade it successfully. Guys, everything that I say in this classroom really comes from the education page. There are no secrets with Nexgen. It's our goal to get you exactly where you want to be as quickly as possible, to get you on the path to success, to get you comfortable, and simplicity is the way to do it. I love this picture. I stole this picture off the internet. Um, in a world where our brains are taught to overthink everything, it's nice to keep it simple sometimes. Draw that straight line. If there's a path, take the easy path, the path of least resistance. Ron's not in here this morning, but he sent me a picture of geese flying once. And he's like, hey, do you know why one side's always longer than the other on the geese? And I overthought it. I thought of everything I could think of. And then he said, well, it's because there's more geese. So let's do that, guys. Let's embrace it. Let's keep it simple. Let's focus, right, on the absolute best of the best and getting you guys where you want to be. And there's a path. There's a very distinct path, and it's a very proven path. And it begins with posting your trades in class. And I can't stress this enough, guys. Everybody wants to be quiet on the back row, right? I'm just going to listen and get everything I need. What you're going to find is that the more you post, the more feedback you're going to get. And that feedback is what's going to take you to the next level, guys. It's difficult when you make a mistake and you don't know why, right? Or maybe you didn't make a mistake, but the trade doesn't win and it's just a cost of doing business. But you're kind of in that, oh my gosh, I must have messed something up. I don't want to post it. Everyone's going to know that I'm not perfect on the first day. Guys, this is where it all comes out. This is where you get that feedback. Post your trades in class, win, lose, or draw. because the idea is that you have to have that feedback. You've got to take that little bit of constructive criticism to help get you to the next level. And then use your spreadsheet. I know that a lot of people like to avoid this because this spreadsheet feels like work to you guys, but every time you take a trade, if you put it in that spreadsheet, right, and you talk about the conditions that were met or that weren't met, you talk about the result that was achieved, what you're going to do is you can go back and study this every day. And I know that Friday, John talked a lot about the study process. And I did go back and I watched his videos because this class is my baby, right? I got to make sure he doesn't break anybody or anything. Hey, good morning, Zeba. Um, and and the one thing he said is, guys, I'm going to give you the greatest software in the world, and that's exactly what he's done. But the one thing that he can't give you is experience. He can't give you repetition. He can't give you the mental clarity that comes through doing something over and over and over again. That's on you. That's your job. It's the world's greatest hammer, but you'll never build a house if you don't swing it. So every morning, come back and look at what you did yesterday, right? What worked? What didn't work? What felt easy? What kept you relaxed? And what felt forced? What made you nervous? Guys, these are all telltale signs. Take these pictures that you present in class, put them in your spreadsheet, literally 3 minutes of your day to go back and look. And by the end of that 3 minutes, you're going to say, you know what? I traded into a termination condition 4 times, and 4 times that didn't work for me. Or you're going to say, I fought the small triggers on the NASDAQ 5 times, and 5 times it ran me over to the lower spot. So you're going to prepare for your day, right? You're going to go in with that mental clarity. This is what I'm going to focus on. This is the direction that I'm going, and I'm going to reach my goals through the understanding. Absolutely, Shogun. Can we talk about it after the second hour, after we go through the trend trade? Because that'll cover the first half of it right there, right? No worries. Um, and I know that John loves the momentum trade. So, show of hands, who got their ass kicked repeatedly trying to take those momentum trades without fully understanding? I did when he taught them. Because we all want to be John Novak, guys, but everything that he talks about comes from that foundation, right? You want to copy my spreadsheet? Absolutely, Gary. And guys, here's a copy of my spreadsheet. You can have it. There's 2 sections on it. Since I just put it in the room, let me show you. That first section is your tracking section, right? Everything that you do, pop in that sheet. And then you've got your favorite looks, guys. Hey, good morning, Debbie. These are my personal trade setups, guys. These are my rules-based. These are my favorites, my best of the best, the highest probability for winning. And I've got about 200 and I think I'm in the 260s now of high probability trend trade setups, guys. And these are, I just put it in the room for you. Download this spreadsheet. But this is part of it, and that was the second half of it. When you're using that spreadsheet, the first part is where you track everything that you do. Every time you pull the trigger, it goes in there. The second half is when you study. We're going back to that dirty word, study, and you see those rules met entries. Guys, take a picture of them because your goal for the first 20 days is to learn your entries, to learn where to get in at the absolute best of the best spot. So if you're posting trades, if you're using your spreadsheet, guys, you're already on an amazing path. We're going to take the first hour this morning and we're going to learn the trigger line and Fibonacci rules for when it's okay to take a trade. And we're going to talk about what we call a high probability trend trade. And it's a trade where every indicator on every chart agrees for the trade. I mean, your triggers are the strongest. There's nothing in the way. Guys, this is the absolute best of the best. And this is a trade that typically wins 70 to 80% of the time. And I'm going to use that word foundation again. When you build a foundation from the absolute best of the best, when you focus on that high probability trend trade, what's going to happen is it's going to teach you to read your charts. And I can't stress this enough, guys. We're chart readers 90% of the time. 90% of the time we're looking at our indicators and we're waiting for advantages, right? It's our chart reading. It's our chart reading. Nice job, Gary. After listening to John or after following your rules? I have to throw that out there, guys. Um, we're going to give you the plan. It's up to you to execute it, right? So great job on that, Gary. Guys, chart reading is 90% of what you do. Chart reading is going to identify the advantages. Chart reading is going to give you the rules meant to be in a trade. And your chart reading is going to have you looking at the market and understanding where it's likely to continue. Guys, that's your entry. That point where the market is likely to continue is your entry, whether it's a high probability trend trade, whether it's a momentum style trade, Shogun, or whether it's a high volume area trade. Identifying where the market is most likely to continue gives the advantage when you're entering the market. Understanding where it's likely to go is going to help you create targets. It's going to help you understand through momentum, through Fibonacci, where that second target should be, where that third target should be. And then you're also going to understand where that market is likely to stop, guys. And these are what we call termination conditions. And a termination condition may terminate the trend, it may reverse the market, it may create a bounce that's too big to trade. And what happens at these termination conditions, guys, is price reacts to Fibonacci. Price reacts to these termination conditions. The guys that move the market, the deep pockets investors, they're reacting to these areas as well. It's part of the brilliance of Nexgen's algorithm that creates these fibs is they are so in tune with what the deep pockets are doing that you're going to see how the market bounces off of them, how it creates reversals. And when they create reversals, guys, this is your highest probability trend trade. This is your first 30 days and beyond. This is that trade that typically wins 70 to 80% of the time. And this is a trade that when one of these termination conditions creates a full reversal and the rules are met for that high probability trend trade, that's the trade that typically wins 70 to 80%. So what we're going to do is we're going to focus on the trigger line of the Fibonacci rules for when it's okay to trade. That's our first hour. Every hour, if you look at all my videos for the last year, I try to instill this foundation in you because it's the foundation that's going to get you where you want to be. You're going to simulate your trades every day, pulling the trigger, whether you're brand new or whether you've been with me for a year and you're still working it out, it's okay. Guys, simulate over and over and over. And what that's going to do is it's going to create that muscle memory, that repetition, right? And we're going to simplify. I want you to focus on making money with the highest probability trend trade, okay? Focus on simulating the easiest, the highest win percentage, the best of the best, and commit to it so that they become easy. That's what that spreadsheet does, guys. If you take this spreadsheet that I'm posting in the room one more time, and you look at 240 examples, 240 examples of rules-based entries, what's going to happen is they're going to begin to be easy, right? We're going to keep it focused on the best so that we can grow to those other trades. After class, use market replay. Guys, I did 3 days worth of market replay this weekend because I'd been out for a week, hadn't even touched my laptop, and I just came back and went through that repetition and took pictures of patterns over and over, reinforcing all the rules that I need to be following every time I take a trade. You can use that market replay to fix mistakes, to retrade, to see the potential of following that proven plan, taking pictures of those correct trades, right? Bringing them back to class, asking for help if you need it. And then you're going to repeat this process every day until you always take the correct trades because the correct trades should be proven to win more than they lose, right? The correct trade should be rules-based, not emotion-based. You should be able to go back. It should be testable that this is a pattern that produces more winners than losers. And then you're going to be able to focus on your execution, guys. That's our plan for the first hour. We're 13 minutes into it. We got about 30 minutes worth of rules. Keep posting your pictures, post your questions. I'm going to get to everybody today. We're going to have a blast. But we're going to start by focusing on the highest probability trend trade, guys. And this is a trade that has 3 rules. That's it. 3 rules. And each rule gives you an advantage. A trade is nothing more than momentum, a clear path, and an entry area. That's it. 3 little chart reading items. That's all. Don't overcomplicate it. Keep it simple. These 3 rules are going to happen on only 2 charts. And I know that I watch the videos, guys. John Novak talks about using that range chart. And he brings it into the classroom, and the range charts are amazing. But the problem is if you don't have the foundation of these simple rules and a simple process to entering a trade, the information that's on that range chart is going to confuse you rather than support your decisions. So make sure that you're comfortable with the easy before you go into the advanced. And let's always use the large chart to set the tone, right? Because your large chart is the opinion of the market, and it's going to dictate direction, momentum, the areas. And your first two rules out of three for a high probability trend trade happen on that first chart. You're going to have the advantage of momentum as well as the advantage of a clear path before you ever take your eyes off of this chart. But when those are in place, we're going to use a smaller chart, and this is going to be your refinement tool. You're going to take that broad stroke of a brush that's provided by the large chart, whether it's the 13.2 or whether it's the 34.5, and you're going to pinpoint your area for entry, that point where the market is likely to continue. This is going to allow you to increase your profit potential. This is going to allow you to decrease your risk. And rule number 3 of 3, that advantage of an entry area, comes on a smaller, faster chart. So I say it every day. I'm going to ask politely once again, guys, let it be easy, right? Let it be simple. You've got the rest of your life to get amazing with this software. So let's build the most solid foundation that teaches you to be a chart reader, and your ability to be a chart reader is what's going to turn you into a day trader. So 3 rules. Let's go to the tutorial section, right? And let's go to rule number 1. Rule number 1 says that I must have strong trigger lines. And strong trigger lines are going to be the easiest lesson you get today, guys. Strong trigger lines simply mean that in an uptrend, when the background is green on my large chart, maybe we should talk about trend real quick. Here we go. My pictures aren't opening. There they are. Let's define trend first. Where direction is the market moving? Telling you, if you never fight this, it keeps you on the great side of everything. If the background on your large chart is green, you're in an uptrend. You should only be looking for rules to be met for high probability trend trades long. If the background on your large chart is red, you're in a downtrend. You should only be looking for rules to be met for high probability trend trade short. Guys, this is your first advantage, is being able to recognize the direction of the market and committing to trading with it. Once you have that advantage of direction, we're going to create the advantage of momentum. Well, your T3 trigger lines are going to give you that advantage of momentum through strong triggers. Strong trigger lines mean that your small triggers are crossed up. They're above the large triggers, smaller solid, larger dashed, and that there is space between the two. The space created between the small and large triggers lets me know that the odds are favorable for the market to continue in the direction of the trend. What this means for me is that this momentum is the most favorable look for buying a pullback to Fibonacci support on that smaller, faster chart. Odds favorable momentum is what you're going to hear in class all day long, guys. You're going to see it annotated OFM. And this odds favorable momentum gets things going. It's that first rule met. It's that advantage of momentum. We call this a strong trigger look. In a downtrend, your small triggers have broken below the large. Both are wide, both are angled in the direction of the trend. And once again, it's that space created between the small and the large that lets me know that the odds are favorable for the market to continue in the direction of the trend. This is the most favorable look for selling Fibonacci resistance on that smaller, faster chart. And you're going to see these pullbacks. They look like tails or wicks. Guys, these are your potential entries and the best of the best, using that momentum to arrive at the next area. And if you commit to this strong trigger look, and I want you to think of them, this is what kind of cleared it for me. When scissors are open, scissors are prepared to cut, right? You can't get work done with closed scissors. So when each blade is separated from one another, you're ready to get some work done. But when they close, when the smalls work their way back inside of the large, this is what we call a weakening of the large triggers. And these weakened large triggers, anything can happen up or down. You lose that advantage of momentum. And what you're going to find is that a market without momentum doesn't always continue to the next area. So you're going to have to be a little patient sometimes. And this is my rule 1 picture, and this kind of shows both scenarios. On the left side of the picture, you'll notice that we have those anything can happen triggers, those weakened large triggers. And that precedes a reversal in the market, which creates odds favorable. There's one of those pullbacks, one of those potential runs with momentum, hopefully to the next area. This one doesn't have the advantage of Fibonacci there. This is only trigger lines. The market weakens once again. The trigger lines work their way inside of the large. Anything can happen up or down, and this precedes a reversal once again that provides odds favorable momentum, which pushes the market down. Guys, this is your best look, and it doesn't happen every second of every day, right? A little bit of patience, a little bit of chart reading gets you to this point. When the large and small don't agree, maybe the large are up and the small are down, or vice versa, or maybe your background is green telling you that you should be looking for longs, but the trigger lines are red, guys, this is just a transition phase. This is where the buyers and the sellers are fighting it out. This is where the average trader gets chewed up in a consolidation point. Next-gen traders, you don't have to. You have the advantage of waiting for that odds favorable momentum. This is your go get a sandwich, go pour a second cup of coffee, refill your water, pet your dog, do anything other than trying to predict what the market is going to do. Because if you're patient, ultimately they're going to work it out and you'll find that odds favorable momentum again, guys. So rule number one is nothing more than the advantage of the momentum, giving you the best of the best look. Rule number one. Is everybody comfortable with that? Especially if you're brand new. I need to make a list of my new users. I know I've got a few of you in here. Guys, this sets the tone. Give me a Y if you're with me. Odds favorable momentum is really the first solid advantage you're going to give yourself. Awesome. Thank you, Lady P. Once we have that clear path, guys, or that momentum, let's make sure that the path is clear. Can't stress the importance of this one. Rule number two, making sure that termination conditions are false. Making sure that there is nothing in the way between you and that target. And termination conditions are nothing more than areas that may reverse the market, that may create a bounce in the market. And it's a comparison of those T3 trigger lines, the same ones that give you momentum, and an area. And I'm going to show you the areas real quick, guys. And I share a lot of pictures in class. So for my new users, I want you to steal these pictures, put them in your spreadsheet, download them onto your computer, study them, be familiar with it. This is like a roadmap for what you're looking at. The areas that may reverse the market, that may qualify as a termination condition. Magenta, divergence high lines. Cyan, divergence low lines. Blue Fibonacci support. Yellow 1-to-1s. And red Fibonacci resistance. Guys, these are going to be the areas on your large chart that we're making that comparison, right? To see if they are an area that may reverse the market. And you're going to do that. It's a simple two-part process. Once again, simplicity. The first thing that must happen is price reaches an area, which means that these dynamic Renko bars come down, in this case, reach Fibonacci support. When price reaches an area, all I need you to do is ask yourself, where are my trigger lines? If my T3 trigger lines remain above this area of support, don't take any more trend trades on the small chart. No trades into the area because it may create a bounce. It may reverse the market. It may create something that is untradeable. And this is textbook termination. Price reaches the area, trigger lines don't break. No more trades into that area. You'll also see it at a high. Price reaches Fibonacci resistance. Absolutely no trigger lines are capable of breaking through that area of resistance. No more trades into the area. It's an area that may stop the market. And I try to keep it as simple as possible, right? So what if every time price reached an area and the triggers didn't break, you sat on your hands because you didn't have a clear path. And you waited to see either the market reverses or the area breaks and the path is clear once again. And that area is considered broken when both the small triggers and the large triggers get to the other side, whether it is Fibonacci support, whether it is Fibonacci resistance, whether it's a 1-to-1 or a divergence high line. When both the small and the large triggers break the area, breaking the area meaning that they both get to the other side, well, now the path is clear. Now rule number two is met. And you'll notice in this picture that I have odds favorable momentum. I end up with a clear path, and there's one of those tails. And I ask you, what if you insisted on a clear path? How would that change your trading? Would it make it more profitable? Most of you would find that it would. So that's our simple comparison, right? This is our, how do we determine if an area may reverse the market, guys? And I'm going to give you two pictures right now. This first one is my termination conditions at a high. We said that these divergence highs may reverse the market. And let's talk about what a divergence high is, especially for my new users. This magenta line prints when there's a loss of momentum at this pivot, when the market goes up to down. But one of the important things to remember is that this divergence line prints right about here on the third bar, because there's calculations that are happening behind the scenes to give you that divergence high, which means that this pivot is not a termination condition because we don't know about it when price reaches it. But when price comes back and reaches that divergence high and the trigger lines remain below, now I have a termination condition. And we call this termination condition a pivot stop out of a divergence high. Here's your divergence high, that loss of momentum. Price reaches the area, the trigger lines don't break. Now it's a termination condition. Now it's a pivot stop out. Price reaches resistance, even with odds favorable momentum. No trigger lines are capable of breaking. We have a textbook termination condition at a high. And then once again over here, 1-to-1s are reached. Rinko bars come up, tap the area. No trigger lines break through, guys. This is your safeguard. No more trades into this area. It may reverse the market. And if it's true for going up, it's got to be true for going down as well, right? Price reaches 1-to-1s and absolutely no trigger lines break through. This is your visual red flag waving. You don't have a clear path. You've reached an area that may reverse the market. No more short trades. And in this picture, it keeps you safe. When this termination condition creates the full reversal, gives you odds favorable momentum, there's a couple of those tails. This is your highest probability trend trade. This is a termination that creates a full reversal. That's what we call a strong bottom or a strong top. Price reaches Fibonacci support. Trigger lines remain above. This is our visual, no short trades, even with that odds favorable momentum. There's one of those pivots. Remember, this line doesn't print until the third bar. But when price returns to that divergence low, now we have one of those pivot stop outs of a divergence low. So guys, simple recipe for termination conditions. Give me a Y in the room if you're with me, especially if you're just learning the software, because this is going to keep you safe more often than not. If price reaches an area and absolutely no trigger lines break through, guys, there's no reason to hope. We don't trade on hope, we trade on rules. Alan, thank you for the Y. Because what you're going to find is that Fibonacci support can stop a market, right? Fibonacci resistance can stop a market. Fibonacci support can stop a market. Resistance can stop a market. Absolutely. Sophie, it's really pretty simple, and the words kind of give it away. Here's a divergence. Let's make it nice and big for you. Here's a divergence, right? Here's a lower divergence. So here's a loss of momentum. And now I have a second loss of momentum, right? And then here is a higher divergence. And guys, the lesson I know John Novak gave all week is that when you have these areas and you get a second divergence, which is higher from a low or lower from a high, it adds strength to the potential of that market reversing. But that's an advanced term, right? That's taking things just a little bit further with your chart reading. So what we're going to do is we're going to keep it simple at first, and we're going to talk about divergence in regards to pivot stop outs initially, right? And then we'll be able to use those termination conditions, and we'll have that second divergence, Sophie, as maybe a confirmation that that bottom really is likely to reverse the market. That's the same thing. The cyan and the magenta are nothing more than the divergence lines. So if I have a high, this pivot has a loss of momentum. Because it's the high, it's going to be magenta. And then the flip side of that is if I have a pivot from a low and it has a loss of momentum, it's going to print cyan. And what this does, guys, is Nexgen color codes a lot of things to make it easier. If it's in the same area, Safia, it will rarely ever be in the exact same area. You may have a divergence low and a divergence high, and let's see if we can find an example of that. And it rarely happens in the same area. So you may have a divergence low, right? And then the divergence high. Do you know what it means? Guys, it means that there was a loss of momentum. The sellers were pushing down and they lost momentum. And then the buyers pushed right back up and they lost momentum. That's all it means, Safia. Guys, these lines on their own are nothing more than a loss of momentum. Which chart is that, Safia? Is that your big chart or your little chart? Okay, so let's look at your picture real quick. The only divergences that I see is I see a divergence off the low. Can I assume that this was a 50-50 trade? And then I get a second divergence, a higher divergence off of that termination condition that didn't break. Safia, this is a pretty good confirmation tool that that area that didn't break is more likely to hold. Does that make sense? That's all it is. This divergence high has absolutely no bearing on your trade. It doesn't add any strength to it. It's this divergence that prints on a 50-50. That's your management tool. Does that make sense? Awesome. And guys, I'm telling you, you're going to try, and I love this because I did it. You're going to try to make sense of every bar, every tick, every line, everything on a chart, especially when you're brand new. But what you're going to find is if you keep it simple, right? You keep it on those 3 rules and you really allow it to be nothing more than momentum, a clear path, and an entry area, it's going to take the pressure of having to understand every line off. And then as you grow with your chart reading, what you're going to find is that your recognition goes up dramatically and you'll begin to start using these little areas and these other divergences to your advantage. So let's go back to termination conditions real quick. Divergence low can create a pivot stop out. When one of those pivot stop outs happens from Fibonacci, it adds strength to the top. It adds power to the top. And when a termination condition creates a full reversal, that's what we call a strong top. That's the setup for your highest probability trend trade. I like to show this picture in the room because I think it's important. It's a pattern that repeats itself a lot. Price reaches resistance and absolutely no trigger lines break through. We know from the rules that there are no more long trades into the area. Notice how price pushes all the way back to Fibonacci support, all the way back to this mid-band area, and the large triggers just simply refuse to follow. There's a full bar's distance to those large triggers. Price reaches support, the triggers are a full bar away, price snaps right back to those large triggers. This is what we call the gap theory. And it just means that if price reaches a Fibonacci area and the large triggers remain a full bar away, price is likely to return. And it does. So we can't go long, we can't go short. 90% of your day is spent reading your indicators, gauging your advantages. But when price reaches Fibonacci resistance again, that divergence high, all of your trigger lines remain below. Now we have a termination condition that ultimately creates a reversal, a strong top. It gives us that small separated from the large, and there's one of those tails, your first shot at the best of the best, to get you into the continuation off of that termination condition. Price reaches 1-to-1s. No trigger lines break through. Guys, look at the momentum on this move. We've identified an area that may stop the market. When price reaches it and the trigger lines remain above, it's confirmation that we've reached a termination condition. Look at the bounce. And when this termination condition creates the full reversal, large go from red to green, it gives us smalls outside of the large, it gives us a clear path. There's another one of those tails, one of those potential entries for the best of the best. So guys, I'm going to ask you one more time, everybody, give me a Y in the room if you're with me. Keep it simple. Price reaches, no triggers, no trade, right? You don't have the advantage of a clear path. The most often broken rule for new users, this was mine. I love to break rules. I did in the beginning. It didn't work out. All right, so sometimes, one more termination condition for me, guys. Sometimes you have a clear path. Everything says down and the market reverses. Sometimes you have a clear path and odds favorable, and that market reverses, right? And it seems to happen with no warning at all. There's no divergences. It just goes the other direction. This final termination condition, and I'd love it if you wrote this down on a piece of paper. The only termination condition that I look for on my smaller chart is going to be 3 divergences in the same price range. Notice the number 3. 3 divergences in the same price range may terminate the trend. And this is a very powerful condition when the third divergence happens with the small triggers inside of the large triggers. Remember, that's our anything can happen look. So not only do we have 3 losses of momentum, now we have anything can happen triggers. And guys, it becomes more powerful still when that final divergence, that third divergence, is higher than the previous, or it's lower than the previous from a high. And I know John Novak has you guys focused on this look, right? Here's those divergences that are slowing things down. Here's a higher one in the next direction. Safia, you saw that on your picture as well, right? And it happened on an area with the potential to break. And guys, it's a little confirmation tool. Everything that we do is patterns. How do you get good at patterns? Repetition. Take those pictures, get them in your spreadsheet, study them each morning. So you're going to see this look potentially from a low, or this look potentially from a high, when your larger, slower, broad stroke of a chart doesn't appear to be giving you that same information. So guys, 3 divergences in the same price range is going to help you identify on a smaller chart change that you can't see happening on a larger chart. You're also going to be able to use those 3 divergences as a management tool. If 3 divergences print and you're in a short trade, well, that's a great indication that it's time to get out of that trade, to wait for things to become advantageous once again. That's the only termination condition that I will respect on a smaller chart. And then I'm going to go through one more look because we're going to talk about this. Absolutely you can. And just a reminder, Lady P, oh, and congratulations. I see that you went from black to purple. Everything that I'm talking about, I'll put this one in the room, but everything that I'm talking about right now, guys, comes from the education page. It comes right from that tutorial section. Here's your section on momentum. Here's your section on termination conditions, right? So you can go back and you can study this on your own, but I will always share my pictures with you. And guys, when we have momentum, when we have a clear path, right? 2 out of the 3 of our equation have been met. All we have to do now is look for an entry area. All we have to do now is look for that area where the market is likely to continue. And rule number 3 is going to have you using a limit order. And that limit order means that you're literally going to wait for the market to come to you. You're not going to chase your trades. You're going to sit at an area inside of favorable large triggers, and you're going to wait for price to come to you. And this is going to allow you to increase your profit potential. It's going to allow you to reduce your risk. And when we talk about, I'm trying to pull my pictures up over here too. There we go. Rule number 3 says that I'm going to use a limit order to buy or sell a pullback. And a pullback is a small retracement in price that is counter to the underlying trend. And that pullback is going to come to an area inside of favorable large triggers. So let's define favorable large triggers before we do anything. And you're going to find that as a brand new user, this creates a huge advantage for you. Because when you have favorable large triggers, meaning that your large triggers on your small chart are wide and angled in the direction of the trend, and your synthetic triggers, that second set of triggers on your smaller, faster chart, is wide and overlapping the large, it's going to create your smallest window of opportunity. It's going to give you the least amount of risk. It's going to create the smallest area where the market is likely to continue. So I'm going to share this picture. And favorable large triggers are where those areas will reside. This is where trades come from. And this will be your look on your smaller, faster chart. When the rules are met on the large chart, when you have momentum, when you have no termination conditions, on your smaller chart, the trend should match the large, right? Everything says up. Your small triggers should be strong. Small's above the large, large are wide, they're angled in the direction of the trend. And now you have those favorable large triggers, both small and synthetic, are overlapping one on top of the other. At this point, you've made the decision that it's time to take a trade. And you're just identifying the areas that may fall within those favorable large triggers. High probability trend trades come from lines, and those lines can be Fibonacci support or resistance, mid bands, or yellow one-to-ones. But our job is to wait for a pullback. And a pullback, that small retracement in price, begins with a reversal bar on the smaller, faster chart. Everything says up, and we get a bar that says down. And guys, this is a little spooky for new users. We're literally going to buy the market as it retraces back to us, and we're going to do it by creating a window of opportunity from the highest point of support inside of favorable large triggers to the lowest point of support inside of favorable large triggers. And if we're looking for a short trade, it's going to be the lowest point of resistance inside of favorable large triggers to the highest point of resistance inside of favorable large triggers. I've created a window of opportunity from the mid band to the one-to-ones, guys. My job is to right click on that chart to activate a limit order and to simply sit on my hands and wait. And if the market comes back to me, excuse me, little voice crack there, teach you to wait. You know what I can do, Debbie? I can't teach you to wait, right? Because that involves me controlling your behavior. What I can do is I can teach you to trust. Guys, I can give you a spreadsheet with 200, right? 200 plus entries. And if I click on one randomly, let's see where the entry comes from. Comes from an area of support inside of favorable large triggers, right? So if I go back to my spreadsheet and let's look for a short, right? Here, this says perfect short trade. It comes right from an area of resistance inside a favorable large trigger. So Debbie, what I can teach you is to trust, right? We're developing trust in a methodology that has been proven to win more than it loses. And when I take the rules and the rules are met and I activate my limit order and I have the advantage of momentum and I have the advantage of no termination conditions, guys, I like to use this picture to help you identify your window of opportunity. You're looking inside of the large triggers, from the highest point of the triggers to the lowest point of the triggers. But high probability trend trades come from lines. They don't come from triggers, which means that, and I accidentally reset all of my outlines, it means that your window of opportunity goes from the highest point of support to the lowest point of support inside of those favorable large triggers. Give me a why, everybody, because entries are the first piece of the puzzle for you guys. My trade is going to originate somewhere between this highest point of support to this lowest point of support inside of favorable large triggers. But because of the momentum on the large chart, because of the clear path on the large chart, guys, I'm going to have my limit order waiting right here at the top of the window. No problem, Lady P. We're going to go through and we'll do a bar by bar on it as well. I'm going to enter at the highest point of support inside of favorable large triggers. This is where the market is likely to continue. But every time I take this trade, I'm going to anticipate that it may go all the way to the bottom of that window because it is a window, right? It's not a down to the tick. We're good. We're not maybe down to the tick good, which means that there's going to be an opportunity every now and then for the market to be wrong. And my protective stop is going to go outside of that window of opportunity. So it becomes kind of an order of events. The market goes up and we wait for a reversal bar. When the reversal bar prints, we create our window of opportunity from the highest point of support to the lowest point of support. And we know, let's see if I can shade this in a little bit. We know that, we'll make it white, and we'll make it kind of clear. We know that this becomes the area where the market may continue. This is our point of entry at the highest point, and then your protective stop will go below the lowest point. It'll go outside of those triggers where the market shouldn't go. Because if the market extends beyond that window, we don't want to be in that trade, right? We've lost that third advantage. And guys, anything that wins 70% of the time is mathematically obligated to lose 30% of the time, which is why I want you to focus on execution initially. So let's see, Lady P, if we can find an example real quick. Actually, you know what? Let's go through the rest of the process and show you how this reduces risk. Price pulls down to support. We're in the trade. Our stop is where the market shouldn't go. And 70 to 80% of the time, this is the result. Hitting that profit target. The market moves in the direction. Your risk is reduced below the reversal bar in the direction of the trade. This is your best of the best, guys. This is your first. And what you're going to do is you're going to be able to study it. So Lady P, we're going to do that right now. We're going to go back and find an example where we can study it and where we can look at this best of the best entry. And it begins with a large chart. Odds favorable momentum. No termination conditions. Remember we said that that's the most favorable look to buy a pullback to Fibonacci support on a smaller, faster chart. If I circle this tail on the large chart, and this is historical, it should line up with an area of support inside of favorable large triggers to create that window of opportunity to give me that highest advantage entry. We're not trading tails because if you wait for the tail, the trade is already gone, right? So this is the scary part for new users is we're literally going to buy it on its way down and we're going to keep our stop where the market shouldn't go. So let's go back to the live market real quick and let's just take a look. And I'm not sure NASDAQ has created a high probability trend trade yet today. All right, we'll use this one right here. Are you ready, Lady P? And guys, this is my first day teaching on 8 since the fixes. That's actually earlier. Let me see what it looked like at 9:43. All right, so I circle the tail. Termination condition creates a full reversal, provides odds favorable momentum. Tighten this up a little bit or we're going to scroll all day long. And we're just going to go through it bar by bar. And here's what I want you to do. Is I want you, because guys, remember, we're only working on entries, right? We're only looking at getting in at the absolute best of the best spot. And John doesn't have a 2 triggers only. So we're going to go like this. Termination creates a full reversal. Full reversal gives odds favorable momentum. The smalls are breaking well above. They're getting above the area. Are you comfortable so far? Let's take away our cheater circle. Lady P, are you comfortable with the idea of odds favorable and clear path? Cool. So let's go to our smaller, faster chart. There it is. Everything says up. This is the look on the small. Notice that I don't even have to have the larger chart up. Everything says up. Large and synthetic are one on top of the other. I've made the decision that it's time to take a trade. But I'm waiting for that one key item, right? Because the rule says that I'm going to use a limit order to buy or sell a pullback at an area inside a favorable large trigger. So Lady P, when everything says up and you're fearful that the market's going without you, we're going to wait for a reversal bar. So far, so good? At the time of the reversal bar, let's create our window of opportunity. So I'm going to take my drawing tool, and guys, you can do this in the beginning. From the highest point of support to the lowest point of support inside of favorable large triggers. And guys, this one's pretty easy. It's a mid-band. Purple one-to-ones don't fit the bill, right? So when we talk about the areas where a high probability trend trade originates, it's going to be fibs, mid-bands, and guys, this is the key, especially for you NASDAQ traders. Yellow one-to-ones. So Lady P, are you with me so far? I've identified from the top of the triggers, let's do this, from the top of the triggers to the bottom of the triggers, and I know that my window lies somewhere in here. So for a long trade, it's got to be that highest point of support, which is the mid-band, to the lowest point of support, which also happens to be the mid-band. This is the point where the market is most likely to continue. So Lady P, what I'm going to do is I'm going to activate a limit order right about there. And let me change that color because that's kind of tough to not confuse with Fibonacci resistance. We'll make it white. My limit order waits just above the area of support. And so, you know why? I think my internet just blinked. All right. Is it better now? Yes. Guys, if it gets bad, let me know. I'm not sure what's happening, but that's happened a couple times. I'm going to try not to touch any wires at all. Reversal bar prints. Window of opportunity identified. And now all we can do, Lady P, is wait. Whoops. Or we could just click on it. The market comes back, it comes back, and there's your entry right at 54. And notice that it goes a little lower, right? But it stays within those trigger lines. So I'm in at 54, and it goes all the way down to 50, right? That's $100 against me, but it stays within those large triggers. It stays within that window. I'm in, my stop is in place, the reversal bar prints, and my stop goes below. And guys, one thing that you have to be prepared for, especially on NASDAQ, is it may push to the bottom of that window, which means that you can't have a stop super, super tight. You've got to let these trades marinate. But if you do, that entry becomes an opportunity to make money. So Lady P, you can go through and you can do this over and over. Every time you have odds favorable and everything is going down, if I circle that tail, once again, NASDAQ users, divergence, it pushes higher just beyond that mid-band, and then it continues in the direction of the trend. So Lady P, you can go back and you can study this, and let me remove all the drawing stuff because I don't want to risk a crash. And what I'm going to do is I'm going to go to the S&P, right? And I can look. Guys, price reaches a divergence high. Absolutely no trigger lines break through. No more long trades. There's a termination condition. Price pulls all the way back to support in a mid-band. Large triggers don't follow. Termination condition. Guys, this looks exactly like what we talked about straight from the manual. I can't go long. And I can't. And price retest. Let's see if we can find a clear long or short for you guys and do one more bar by bar on the entry. And this was maybe Friday afternoon. pattern repeats itself. I'm going to scroll back real quick. All right. Guys, you want to do one more? Lady P, do you want to do one more? Odds favorable thing says up. Purple 1-to-1s aren't on my termination condition list, right? So I go to my smaller, faster chart. Everything says up. The two align, right? And what's going to happen is this is going to get easier to analyze. And you're going to find that through repetition, guys, you're going to recognize these things in a second's notice. Everything says up. Everything is strong. I identify my large and my synthetics overlapping. So Lady P, all I'm doing is I'm kind of looking and I'm saying, man, if I get a reversal bar, I'm going to create a window of opportunity. And everything continues up and there's my reversal bar. So I have to identify from the highest point of the triggers to the lowest point of the triggers, and then tighten that up from the highest point of support to the lowest point of support inside of favorable large triggers. There's your window of opportunity. From the high to the low. Are you with me, Lady P? And you can do this all day. You can go back historically and circle these tails and see how they work. And then the market comes down, comes down, comes down, and boom, right off that highest point of support. We're in a trade, and our stop is down here where the market shouldn't go, and it looks to be right around about 12 ticks on the S&P. And then there's your reversal bar, right off of that best of the best area. And you went from having 12 ticks of risk to about 3 ticks of risk. And Lady P, all of that momentum, that direction, that clear path, off it goes. Right to a termination condition, that point where the market is likely to stop. And that's 6 points. That's $300 per contract. Does that make sense, Lady P? Guys, everyone can do this. Anyone can do this. The key is repetition, is getting that familiarity with the best of the best look. Odds favorable momentum. Everything says down. Small's below the large. The path is clear. Guys, that termination created a full reversal. But now it's gone to where the market is likely to stop. Now it's gone to a termination conditions, and I have to sit on my hands for just a minute. If the area breaks, I'll continue to look for short trades. If the area holds, I'll wait for the reversal and I'll look for longs. And guys, I have no idea whether it's going to reverse or whether it's going to break. I have absolutely no idea. There's no reason for me to predict. There's no reason for me to fight strong triggers. There's no reason for me to fight the trend. There's no reason for me to fight termination conditions. Simply sit on my hands and wait and see what happens. 90%. Does that make sense, guys? We just watched it. Whoops, that's the wrong. So here's crude oil. 3 divergences in the same location may terminate a trend. Look at how Fibonacci holds. You guys want to learn how to identify consolidation in the market? Fibonacci resistance and weak triggers pushes all the way to support. Pushes all the way to resistance, all the way to support, all the way to resistance, all the way to support. Guys, you've identified pretty clearly areas that need to break before looking for a trade. Give me a Y in the room. And notice that the smalls are down and the large are up. They don't agree. Do we have to predict? Do we have to be first? Guys, the Ricky Bobby theory doesn't work in trading. If you're not first, you're probably safe, right? You're not last. Trading is about advantages. Trading is about executing when those advantages are realized. And those advantages come from a proven methodology, right? Something that has over and over, something that's testable, that lets you know that you're entering the market with a trade that typically wins more than it loses. Guys, this is your rules for the high probability trend trade. This is what's going to teach you to read your charts. I'm going to beg and plead for you guys to keep it simple, right? What I find more often than not is the people that keep it simple have the greatest results. And it's that repetition of keeping it simple. Give it 30, 60, 90 days of taking the absolute best before you try to branch out and take all those other trades. If you can't make money with a simple plan that's been proven to win, how are you going to make money with a difficult plan, right? We all see things differently, but it's imperative that you learn to read your charts, because once you become a chart reader, you're on your way to becoming a day trader. And guys, that's our first hour. This is the same first hour every week. So if you're brand new to Nexgen, once again, welcome. It's amazing to have you here. I talk about simplicity in the first hour, and I embrace it wholeheartedly because it is my firm belief that what we teach is the most amazing thing that you're ever going to learn. Show me a picture, learned hand, and let's talk about it. On the S&P, did it just happen? Price reaches support and no trigger lines break through the area. Are your rules met, learned hand? Do you have a clear path? And guys, this is the problem that you're going to run into. So what you're telling me, learned hand, is that you've reached a termination condition, that price reached support and absolutely no trigger lines break through. So you know that this may create a bounce. You know that it may create a problem. And let me show you how the human psyche works. Are you ready? Oh, you're going to love this. Why didn't you go long there? Because your rules weren't met, right? Does that make sense? Why didn't you give this reversal bar any sort of credit? Because your rules weren't met. The same reason this reversal bar means nothing, because your rules aren't met. Does that make sense, learned hand? And this is why these confirmation charts will absolutely eat your lunch as a brand new user, because you will pick the signals that get you into a trade. You'll go, hey, this one gets me short, so I better take that trade, right? And you completely ignored the fact that there was a reversal bar from a termination condition below, because you think this is your opportunity for money. Does that make sense, learned hand? So what do I think about that signal? I think that it's absolute garbage, and let me show you why. And this is, guys, this is coming from a brand new user thing. Market flow analysis. And if you take nothing else from market flow, let it be that market flow signals that will initiate entries when the rules are true. When the rules are true, lead the way. You're going to get lucky every now and then, right, learned hand? But if you insist that you only look for signals when the rules are met, what you're going to find is that you're going to begin to ignore those little blips into a termination condition. And it's probably going to keep you more safe than it doesn't, right? 60% of the time it works every time. So you're going to begin to learn when it's okay to use these signals because the rules are met, and you're going to learn when it's just time to ignore the signals. And so far that termination condition appears to be holding, right, learned hand? So if you waited for the signal, you didn't have any room to manage that, did you? You're trading directly right back in. And guys, it may go down, I don't know. But it's these little maybe trades. It's these little hopeful trades. It's these little rule breakers that destroy your P&L, and they don't allow the ones that are amazing trades. They don't let the profits from those amazing trades run. Tony, so what you're going to have to do is you're going to have to go to Tools, Options. You're going to have to go to Market Data, and you're going to have to click Show Tick Replay. I kind of like having NinjaTrader 8 up. And so far, guys, I've been, and this will probably jinx it, I've been crash-free since the fix. There you go, Tony. Whoops, I said that and I just crashed it. Damn it. No worries. Let's pull it back up. So, guys, what I'm going to do is I'm going to pull my Ninja Trader. Yeah, I know. I said it too, right? I'm going to pull my Ninja Trader back up, and I'm going to take just a little break. So I'm going to mute everything while I do that. Guys, we're going to go into the second hour. And that was a great question, Learn Hand. We're going to go into the second hour. Psh, you better believe I will. PFI, I want you guys embracing that. There it is right there. That's all my pictures of rules-based entries. And we're going to talk about, so you'll notice some of them say high probability and some say 50-50. And we're going to talk about the 50-50 as I go into the next hour. But what I am going to do is I'm going to pull my Ninja Trader back up. Man, and you know what it was, and I really think it was, guys, is I left my drawings up on the chart. And one of the things that I've noticed on my computer, because my graphics card isn't the best, is that when I leave my drawings on charts, it creates challenges. So I'm going to pull it back up and we're going to see what happens. I didn't go through the rigmarole of clearing everything out, and I probably should have. But here comes that S&P back up real quick. There it is. And then learned hand. And this is really for everybody. Termination condition, right? No reason to take the short. And look how it reacted. Learned hand, great job following your rules. Does everyone, give me a Y in the room if you see. Oh, let me pull up. Man, did I lose my stream too? Wow, I lost my stream too. Can you guys hear me? Can you see my charts now? Okay, cool. I can't see it on my, awesome. But there it is, right? So for you newer guys, Jeff B, Lady P, and even you people that are still into it a little bit of respect on those fibs, right? Price reached it, triggers didn't break, and look at the reaction. So let's do this. And guys, I want you to be comfortable with this. Who went short? I would have. As a brand new user, I would have gone short all day long because of odds favorable momentum in a red chart and because I had an area of resistance inside of triggers. And what you're doing right now as a brand new user is you're creating trust in the rules. You're creating trust in momentum, but you're also creating trust in termination conditions. They may create a bounce. They may reverse the market, right? And it keeps you safe. And that safety is what's going to set you on the path to success. And here comes crude oil, right? We can see what's happening. I can see without any Fibonacci that crude oil is still trying to break out of that range, isn't it? Oh, and look at this, guys. Gray screen. Who had this happen? I saw some people talking about it. That lets me know that there was definitely a little corrupt data in there. So I'm going to change my 10 days to 9. And watch this. When I change those 10 days to 9, it gets rid of that little corrupt data. That's a trick that Jason taught me. That's a good one. So we're still trying to break out of the range on crude, right? And we're still trying to break, and we still had support that held like a champ. So guys, I want you to sit on your hands and wait for your rules to be met. I'm going to take 5 minutes. Do me a favor. If you have a question, post it in the room, right? If you have a comment, post it in the room. If you have a chart, post it in the room. And then when I come back, I'm going to scroll up to the top and we're going to start looking at what you guys were doing today. We're going to talk about the advantages. We're going to look at it. And then Shogun, we're going to talk about the difference between momentum and a high probability trend trade. And we're going to use rules to do it. So I'll be back in about 5 minutes, guys. Everybody have a good time. Stretch your legs, breathe through your eyelids. I'll leave you with the S&P, and we'll see what happens. Back in a minute, guys. Just a short little break. Had to refill my water. So when I look at your charts, guys, I want to show you right here. The one thing that I have to do is I have to scroll back and forth. I have to go from the top to the bottom, which means that I'm going to look at your charts and I have to scroll to the top to find them. And then I have to scroll back down to find any questions associated. So we're going to start. Gary got us going. And notice that Gary identifies a termination condition, right? And one of the things that I appreciate the most about Gary is that he'll take a picture when the rules aren't met. He'll take a picture whenever his rules aren't met. And what he's doing is he's kind of validating and he's verifying and he's saying, hey, look, my rules aren't met. Price reaches support. No trigger lines break through. And then you'll also notice that he has three divergences in the same location on the smaller, faster chart. That's another big red flag that says, hey, this area may hold. He's using it as a confirmation tool. And then beyond that, now he's looking for what we call the high volume area trade. And the high volume area trade, guys, this is your first shot. When you do add a trade in or a chart in, that range chart, this high volume area trade becomes your first opportunity when a termination condition is creating a full reversal. And then Gary, I put a little note on there because I think that the picture's outstanding. And the note that I put on there, whoops, one second. The note that I put on there is, guys, I want you to see this because this is a NASDAQ trade. The termination creates, and there's your bounce, and it pulls back to the HVA. So Gary, your HVA trade was down here. It's that first line from a termination for you HVA traders. That's the one down here. This is where the trade originates, right at those large triggers up, the pullback. But look at the phenomenon once again on that NASDAQ. And I know that I've got NASDAQ traders in here, and I want you to recognize this. The small triggers are down, right? And it just pushes just a little bit, and then once it clears to the correct side of those small triggers, everything heads off to the races from the termination that creates the full reversal. So Gary, great picture. And there's just one, and I'll post this one in the room again for you. Just a little chart reading, a little bit of a pattern repetition on the NASDAQ. And hopefully you guys find that helpful. And then we went through today, and I wanted to talk about, man, I'm pulling up NinjaTrader 7 right now. My 8 went down again. I didn't go through the... What do you mean we don't use the midband? Which midband? Which chart? Where in the rules does it say... I'm so confused. Which midband are you talking about, Gary? Are you talking about the midband right here? On the 13.2? So what I would ask you, Gary, is what do your rules for an HVA trade say? And guys, this is one of the reasons why I literally plead with you guys. Keep it simple first, right? Because if you talk about the rules, there's zero reference to a midband on a range chart anywhere, right? There is zero reference. Your entry is your HVA line. That's why it's called an HVA trade. So your HVA line must be at wide, large triggers up, or your really first shot may be at these small triggers that are up from a good termination condition. Good morning, Abdulaziz. Does that make sense, Gary? So kind of what's happened here is you've manufactured a rule. The midband where? Let me look at what you just posted. I see what you're looking at. No, so that goes back to, Gary, where determination conditions happen. They happen on the large chart, right? So if the termination conditions happen on the large chart, that midband that we're looking for is on the large chart. The large chart always leads the way. Always leads the way. So in this picture, it doesn't really work, right? Because the midband, you're already above it all. But if your midband was up here, Gary, then that midband becomes the first target. But your midband's right at the support that created the termination. You could take off the midbands. You could take off the fibs. You could take off everything on here and have those HVA lines. And it's the termination, triggers roll, pull back to the area right there. Does that make sense? So guys, this is one of the reasons why keep it simple, right? Focus. And then when you add trades, do exactly what Gary's doing. Post your picture. We'll talk about it. We'll get clarification. And this is one of the great things about Nexgen, guys, is there's always feedback available. I mean, there is always feedback available. All you have to do is post the picture. I'm bringing up my NinjaTrader 7 real quick. So Gary, great job on that one. And now we have a little clarification, right? And I just scrolled into next week. And as this comes up, let's talk a little bit about that high probability trend trade one more time, guys, because what I want to do is I want to give you a couple things, and I totally skipped out on it. For you guys that are brand new, I'm going to give you a checklist. And this is for all of my new users and for you people that are trying to get back to consistency. This is a high probability trend trade checklist, guys. This is a trade that when you mark yes on each of these items, typically wins 70 to 80% of the time. When we're coming from a termination that creates a good bottom, and guys, this video link right here, I'm going to copy that hyperlink. and I'm going to put it in the room, and hopefully, actually, I'm not even going to put it in the room, but this video is going to help you identify good tops and bottoms. It's a great study tool. If you have odds favorable momentum, no termination conditions, areas inside, if it's yes to every one of these, guys, this is a trade. I've never had anybody in the history of this checklist follow it to the letter, mark yes on everything, and do worse than 70% winners. Let that sink in for just a second. If you're at 30% winners, maybe back to simplicity is a good path. If you're at 40% winners, if you're not making money yet, maybe simplicity is a good path for you. Never had anybody in the history do worse than 70%, but it requires a level of patience to wait for the rules to be true. Another one for my newer users here. Here's the exact same checklist, the exact same rules, the exact same items, but what I've done on this one is I have liberated pictures from the user manual. What is a good top or bottom? Well, it's a termination that creates a full reversal. You're back to the checklist, David. Here's your odds favorable. Here's your termination conditions defined. And here's your window of opportunity defined, guys. This has all your rules. Review it every morning. David, can I ask you something? And guys, your trading business isn't my business really, but I ask sometimes. Is going back to the checklist making it easier? Is it taking the stress off? Are you winning more than you're losing again? Because what I've found is historically, when people focus on the process and they keep it simple, they start winning. And then when they stray, they start losing, right? Yes or no? I don't understand your answer. So you're saying that you're still getting mixed results? Which is okay. But then that would be where I suggest perhaps we're posting a lot of pictures, right? And getting feedback. It does. It simplifies. It simplifies very much. And then guys, finally, I'm going to give you one more thing here. Daryl, the only time I do dumb things is when I try to predict, when I try to do it. And this is why I talk about simplicity so much. And I'm glad that you guys are posting this. Thank you for this. But what I've found is that when you focus on the process and you keep it rules-based and you find a way to keep your opinions out of things, success tends to follow. The average trader deviates from success when they deviate from a plan. So one thing that I've done as well, guys, is I've created this checklist. And I've created that checklist and I've turned it into a simple plan for consistency. This is the KISS plan. This is the Keep It Simple Sunshine plan. And it starts with that high probability trend trade. And all you're doing is you're defining your entries, guys. You're saying that in order to enter a trade, the rules of this checklist must be met. You're making a written commitment to yourself that this is your plan for success, right? And all you're focused on for the first 30 days are entries. Getting in where the market is likely to continue, because I've said this a million times, I swear I'm going to get coffee mugs made with it. Great entries create manageable trades. So if you're getting in at the area inside of favorable large triggers, your opportunity for management, for successful management, goes up dramatically. So simple plan for consistency. It begins with never fight the large chart direction or trigger lines. Never fight direction or momentum. Get your best of the best entry, guys. And 20 days of focusing on entries is going to create huge results for you. And once you're in at the best of the best spot, you have to manage. But guys, management requires chart reading. And chart reading is going to happen through study on the high probability trend trade. So what we found, do I have a checklist for the NASDAQ, Abdulaziz? The rules are the same. The only difference is that your large chart is the 34.5. Your small chart is the 13.2. But Abdulaziz, the NASDAQ has some personality traits that are different than crude oil, that are different than the S&P, which is one of the reasons that I really like to teach on crude and the S&P. But I know a lot of you guys are adrenaline junkies and you want to trade the NASDAQ. So Abdulaziz, one of the things on the NASDAQ is never fighting the small triggers. But the rules are the same for the trade, guys. You still have to have momentum. You still have to have a clear path. It's even more imperative on the NASDAQ to have a clear path. Um, but you've got to learn to manage your trades. So while you're learning to read your charts, a mechanical, pragmatic, opinionless approach to management tends to be advantageous. Entries are the same, right? Your entry comes from an area inside of favorable large triggers. My mechanical approach says that I'll trade 2 contracts. My initial stop, I will set my stop at 12 ticks for crude oil for the S&P. And this gives me reaction time. It's not saying that this is where my stop is going to be at 12 ticks. It gives me time to move it outside of the window of opportunity. And guys, at this point in the trade, you've taken your perfect entry, right? You have 3 advantages in place. Your stop is where the market shouldn't go. There's nothing for you to do at this point. There's no hope, no want, no fear. Simply either let the market hit your initial stop. You're going to take that loser. It's part of that 20 to 30%. It's a cost of doing business. Or the opposite's going to happen. You're going to get a reversal bar in the direction of the trade. And if you get a reversal bar in the direction of the trade, you're going to move your stop 2 ticks above or below the reversal bar. You've reduced your risk. The trade's beginning to do what it says it's going to do. And once again, there's absolutely nothing to do. You're either going to get stopped out for a small loser, or it's going to get to your first target. Guys, we're being pragmatic and methodical in the beginning. When you grow with the software and learn to read, your management plan will change as well. Perfect entry. We've reduced our risk. Our targets are in place. Our targets that are $100 and $200. Simple. If the first target is reached, I'm going to move my stop to break even. I have $100 in the bank. Nobody can take that from me. And that $100 is in my account, and I'm going to move my stop to break even. I have 0 risk on the trade. And now I either get stopped out break even, or it goes to my second target, that $200 target. And if it goes to that $200 target, guys, this is a $300 trade. This is a $300 trade with every advantage. This is a $300 trade with everything saying that the market was likely to continue. It's the best of the best entry, right? $300. If that's all you collect once a day, guys, that's a $1,500 week. That's a $6,000 month. That's a $72,000 year based on one trade that hits both targets. And that's simplicity. This is a trade that typically wins 70 to 80% of the time, which means that if I take this setup, 20 to 30% of the time, we're going to allow the market to be wrong. So guys, I give you this simple approach, right? The KISS plan. Embrace it. This KISS plan came to be from a gentleman that was trading our software. He had had it for a while, and he called me one day and he said, "Mark, I'm chasing everything and finding nothing." And it was kind of amazing because that phrase really set it up. It really supported the idea that simplicity can yield results. He was looking for everything. He was looking for momentum trades. He was looking for high volume area trades. He was looking for counter trend trades. He was looking for jump in trades. And what he was doing is he had 7 sets of rules that he had to analyze in the moment. He had 7 entry conditions that had to be satisfied, right? And he was confusing his entries. He was using the rules from one trade and superimposing them into another trade, and he was losing more than he was winning, and he was negative and he was frustrated. So we created the simple plan. We said, hey, let's focus on the best, right? Let's focus on making money simply, and then adding to that plan, or maybe not even adding to that plan. Guys, a $300 trade can be a $3,000 trade with nothing more than the addition of contracts, right? The advantages are still in place. We're just adding contracts, better trades, not more trades. And one of the things that I see a lot of you guys do, especially when I go away for a week, is you start trying to add more and more to your plan rather than being successful with simplicity. So let's focus on simplicity. And this is your first trade. And it's going to lead you into your second trade. And this is kind of where we're going to talk about the forfeiture of an advantage. Now I want to go to the glossary of common terms. We focus on a high probability trend trade. We focus on a trade when each indicator on every chart agreed for the rules of the trade. Now we're going to talk about a medium probability trade. And a medium probability trade, it's on this trade plan. It's what we call a 50-50 trade, guys. And this is going to be the first one that you look for. And a 50-50 trade means that we don't have a clear path. And I'm going to show you exactly what it looks like when we talk about these termination conditions. We know that if price reaches an area and no trigger lines break through, that we no longer have a clear path. We watched it reverse the NASDAQ. We watched it reverse the S&P. We watched it hold crude oil into a range, right? We believe in these termination conditions. We know that when the small and the large get to the other side of an area, that area is considered broken, that we now have a clear path. Guys, your next trade, and I'm showing this before I go through all the pictures because you're probably going to see a lot of these 50-50 trades, is when 50% of your trigger lines, the small trigger lines, get above the area that was behaving as a termination condition. When the small triggers get above it, the large triggers remain below. This becomes an area with the potential to break. And it only has the potential to break if you have odds favorable momentum. So many of you try to take weak triggers 50-50s, guys. With odds favorable momentum, this area has the potential to break, but it is not a clear path. And since it's not a clear path, it means that it can't be a high probability trend trade. It means that an issue exists. And a medium probability trade is defined as when most of the indicators line up for a trade, however, a small issue exists. Your issue is the lack of a clear path, which means that you should not sacrifice momentum, nor should you sacrifice an entry area. This is ultimately going to be the majority of your trades, guys, but when you take these trades, you have to manage them assertively. You have to be able to read your charts, and you have to be able to read your charts fast. If there's trouble in your way, taking quick profits at that trouble spot, getting to a zero risk level. So what you're going to find is that when the area has the potential to break, but it hasn't broken, you're going to be able to gauge advantages, right? Don't give up momentum. Don't give up an entry area. The smalls have broken through the area, the large have not. We have a 50-50 look. On my small chart, my money is worth a perfect entry, and that perfect entry means no divergence on the 5-1, no loss of momentum because I've already sacrificed a clear path. I want strong triggers on the small chart because I'm not sacrificing momentum, and I want my window of opportunity to be small. I want to be able to have the least amount of risk on this trade. Long trades, you see the same things. You're not sacrificing momentum, tiny little window of opportunity. Guys, this is going to be your first 50-50 trade. One area not broken. And you're going to go through this checklist again. And when you add this trade, it's a different checklist. You can't use high probability trend trade rules for a medium probability trade. You have to have strong triggers on both charts. Notice that it says no divergence on the 5-1. How many times have you been run over on a 50-50 trade with divergence on the 5-1? There's a reason this is included, because this is your simple plan for consistency, giving you the highest chance of success. You should be coming from a good top or bottom, from a termination condition that creates the reversal. And notice that it says enter at the area. I don't incorporate a range chart. I don't incorporate looking for market flow signals. What I'm doing is saying that all of my charts must give me the highest advantage. And then for the second time, I put in there, if divergence prints no trade. Management has to be different. The initial stop is outside of the window of opportunity. And then it's still above the reversal bar. That doesn't change. Here's our third reminder. If divergence prints, exit the trade. First contract at the trouble spot, then go break even, second contract, taking quick profits. Guys, these are base hits. These are not home run trades. These are medium probabilities that have to be managed assertively. That's your 50-50 trade. No triggers, no trade. Both triggers, clear path. One trigger, let it be perfect. Guys, I'm going to give you this picture. This is the most abused trade. So I gave you the advantages. And I'm going to give you one more set of pictures, and a lot of you are going to identify with this. If the market's not coming from a termination condition that creates a full reversal, it lessens the chance of success. If the small triggers have barely eked through an area, it lessens the chance of success. If the market's trying to break multiple areas, it lessens the chance of success. Guys, these 50-50 trades do not have a clear path. Give yourself advantages. Sometimes areas have the potential to break. When your small triggers get past the area, the large do not, it can break. The key is making sure that you have strong triggers, guys. That's got to be non-negotiable for you. Odds favorable momentum has got to be an absolute on your 50-50 trades. So there's a couple little hints and a couple helps as you move into that medium probability trade. I'm going to scroll up. We're going to start looking at more pictures. And I put a series of pictures in here of a 50-50 trade that's set up this morning. Whoops. All right, so here's our first one. Smalls above, larger not, odds favorable momentum, strong trigger lines, and guys, notice that divergence prints. A lot of you want to get in at the top of the window. We saw it happen, right? Divergence means a lower push. Divergence is a loss of momentum. We're now sacrificing a little bit of momentum as well as a clear path. This is your indication, and this is for you NASDAQ traders. And NASDAQ traders, I want you to give me a Y in the room. Strong small triggers mess things up. Divergence can push things lower, right? So I don't have a clear path, and now I have a loss of momentum. I'm waiting for the bottom of the window, guys. And if it doesn't get there, that's cool, whatever. I'm willing to miss this trade because it's not perfect, and it's medium probability, and it has less chance of winning than if I had a clear path. So I'm going to go through this entire trade, guys, because my entry came from the bottom of the window. And I wait, ooh, that's a big picture. I wait for a close on the correct side of the small triggers. When I have a 50-50 and I know that it may push down, guys, this helps me out. That's my close on the correct side. I'm no longer fighting those small triggers, and I'm using the areas. And medium probability trades have to be managed, which means that I'm taking off most of my position right at that trouble spot. And guys, there was a high volume area line right here against the trade on a 50-50. And if divergence prints, I know that I'm out of that trade. So my stop's no longer down here. My stop becomes where divergence may print. And then as we get into that trouble spot, right, my smalls are right below the large still. I'm coming into this trouble spot, and this was a range chart trouble spot for me. I'm not willing to lose at this point. And then when divergence prints, it becomes an exit condition for me. Second divergence without a clear path, I'm out of that trade, and I don't care what happens next. And then the final thought on this trade, guys, is I want you to see how these medium probability trades can add up. My first entry, I took off 3/4 of my position at the trouble spot, and I made $300 on there. And then when the trouble increased, I got out of the trade. That was it. I made $330 on a 4 lot, about 5 seconds of my life. Abdul, my entry is without a signal. My entry on this trade, because of the divergence, because of the not clear path, because of the strong triggers, my entry, I wait for a close on the correct side of the small triggers. And this is one of those NASDAQ nuances, guys. This is one of the things on the NASDAQ. Remember that you're trading a 34.5 and you're trading a 5.1. Abdul, I didn't wait for the market flow signal. I did get one. But what I'm waiting for is for price to get on the correct side. When the conditions are right, I'm waiting to be on the correct side of those small triggers. And I have found in my study that that keeps you from getting run over more often than it doesn't. Does that make sense? There's so many instances where you have the perfect trade on the NASDAQ, but because of those strong small triggers against it, it just pushes to the bottom of the window. Because of that divergence, that loss of momentum, it pushes lower. Does that make sense? Guys, this is just a nuance of the NASDAQ. There's a reason that we never taught NASDAQ. John got everybody excited about it. But the top of the window doesn't work because of the loss of momentum. The top of the window doesn't work because you're on the wrong side of the small triggers with the loss of momentum. And if you got in at the top of the window, that becomes your management point. And then there's your second chance entry. But because I hate getting run over and I don't want all that risk on there, I just wait for the second. It could be. If you waited for the signal right here, it's great. But you also had one from the top of the window, Abdulaziz. The reality is that I don't need it. I don't need a market flow signal to know that I shouldn't, because you got one here, but divergence said no. Not having a clear path said no. And then you also got one here from the bottom of the window where divergence supports that it pushes down there, with your momentum supports that it pushes down there. And not fighting your small triggers supports that you wait for the lower point. Does that make sense? Guys, NASDAQ is amazing. And there are so many opportunities to be had on NASDAQ. But if you're not comfortable with your plan, NASDAQ is going to drain your account like a bathtub. And I hate to say that, but it makes sense to focus on the best of the best. It makes sense. And let's see what happened here. 50-50 trade. Look at all the divergences. And it doesn't work. Here's the easiest way to explain it, Abdul. Do you see these small triggers? Coming down, coming strong, they're vertical. Everything says down. I always have time to read it, Safia. Absolutely. Do you know how long it takes me to analyze the NASDAQ? 3 seconds. Because I start here. Termination condition. Done. There we go. Isn't that neat how that works? I'm always starting on my large chart, guys. And this is where, and Safia, you're gonna get this. This is where new users absolutely shoot themselves in the foot. Because what happens, and I don't even think I have a range chart made here. What happens, I'm going to take a picture and I'm going to expand on it. Ziba, don't even call it chop. Call it rules not met, right? It shouldn't matter if you feel like taking trades or not. Your rules aren't met. So Safia, what happens, and I'm going to show you here real quick. Let me stretch this out. And let me show you what new users do. And we're just going to let this call out represent your range chart, okay? And guys, I want you to do this with me. I want you to see this. Everything starts on the 13.2. So what direction is the trend? That's where we start, right? Everybody, answer the question if you're brand new. Are we up or down? We're up, right? So once we determine that we're up, we have to decide, do we have strong triggers? Are the small triggers above the large or the large wide? Are they angled? All right, so now we have our direction and we have our momentum. So now we have to have a clear path. Guys, Ziba, you said that price reached an area and the trigger lines didn't break. So we have a termination. Rule number 2 isn't met. Guys, give me a Y in the room if you're comfortable. We had the direction, we had the momentum, we had the clear, or we looked for the clear path, and we don't have it. Guys, why are you still looking at a small chart? You got everything that you needed, right? So it doesn't matter what the range chart says. But let's do this. Let's pretend that we had a clear path. We're just playing a game, guys. We're playing the pretend game right now. If we had a clear path, let me tighten this up. Look at your trigger lines. Ziba, you just hit the nail on the head. The problem is you're so desperate to take trades that you'll say, look, I had an area of support inside of a trigger. It's not even favorable large triggers. They're split, guys. They're not overlapped. They're not one on top of the other. Rule number 2 keeps you safe. Rule number 3 wasn't even met. But a lot of you go long right here because you don't let the large chart lead the way, because you let the small chart. So termination condition, I guess what I was going at for this, Safia, if the rules aren't met, it doesn't matter what the market flow chart says. If the rules are met, if I do have odds favorable, if I do have no termination conditions, we have to pretend that this divergence low isn't here. So let me get rid of everything, right? I have a termination that creates a full reversal. No, you said it perfectly. I have odds favorable momentum. I have a clear path. I have strong triggers, and I have an area of resistance inside of favorable large triggers. This is the one, right? That's your trade. That's your best of the best trade. And once again, a lot of you guys are saying, well, I need market flow. I want a market flow signal. Stop looking for it. You don't need it. But if this were a 50-50 and you were looking for a market flow signal, the analysis still has to be correct 100%. You still have to have strong triggers. You still have to have everything that lines up. And then all market flow does is it can provide confirmation, which means that if you reach, whoops, that's the wrong drawing tool, which means that if you reach the area inside of favorable large triggers, but something is wrong and you want market flow confirmation, then and only then does that market flow have any relevance on the trade. But you've already done your analysis, Safia. You've already established advantages. You've already established areas. You've already established entry. So how difficult is it to look over at your market flow real quick and wait for a bar? Does that make sense? Your analysis is done before you ever look at market flow. Awesome. And I think that is where sometimes people put the cart before the horse. Is they say, well, I had an area on my small chart, but the rules weren't met. Amen. Abdul Aziz, I can't stress that enough. Don't use market flow. The horse is the large chart. But look at how your rules weren't met. And I sent pictures to somebody, and they're probably buried so deep, but let me see if I can find them. No, they're going to be so far back. Guys, when you use market flow, my first day back after a week off is always my most difficult day. When you use market flow, let me see if I have a market flow chart. I believe I have one built on my S&P, so I'm going to let my S&P come up. While that comes up, I'm going to scroll through and we're going to look at some more pictures, guys. What market learned hand? Let's take a look at Zebra's chart real quick. I just called you Zebra. I'm so sorry. Had too much coffee. So Zeba, 50-50 trade, no divergence. I love this. The market has weak triggers. It turns, divergence prints. The small break through, but the large don't. No divergence, strong triggers, great entry, stop where it belongs. In Zeba, you make money right to the problem area. Holy smokes. Zeba, this is a beautiful trade. Absolutely beautiful trade. Odds favorable, 50-50, no divergence, strong triggers, little window, perfect entry, money, money, money. It can be that easy. Learned hand, it can be a couple different things. It can be whether or not you have tick replay. We were looking at my NinjaTrader 7 and I didn't delete the cache or the data because I didn't think that I was going to need it. So there could be a couple different things going on. Trade your charts. Guys, this is a picture that if I were you, I would steal. Everything, odds favorable. It's a 50-50, but there's no divergence, strong triggers, tiny window, and she takes all of her profits right at the area that hasn't broken. Zeba, I could literally teach a class with that picture. Beautiful execution. And you didn't get greedy. You took your money at the trouble spot. Guys, I'm going to tell you right now, everybody can do this. If you're brand new, everybody can do this. The only thing that you have to do is repetition. Alan, why did you not take this trade? 50-50, look. Alan, are you with me? Can I tell you why you didn't take this trade? Because I know exactly why you didn't. I'm going to take a picture of your picture. One chart, two charts. There's one behind there. There's another one. Here's one. There's another one. Because, Alan, you're looking at too much stuff. You're trying to have everything instead of the best. You're trying your best to give yourself so much information that there's no way you could ever lose, right? But all you're doing is you're confusing the shit out of yourself. Pardon my French. So let's go to two charts, a large chart and a small chart. Alan, do you have strong triggers? Awesome. Do you have a clear path, Alan? It's a 50-50, right? So you're done. Boom. 2 seconds. Analysis. No overthinking. It's a 50-50. Yes? Smalls are through, large are not? Comfortable with that. So what does that mean? So let me use this phrase again. And I'm going to type this in all caps for the people in the back row. You ready? My money on a 50-50 trade is worth the perfect entry. No divergence, strong triggers, small window. And these are the same conditions that were put on that simple plan, right? Strong triggers, no divergence, get in at the area. So Alan, why didn't you take this trade? Because you were confused by other charts. Your rules said that with no divergence and strong triggers, you take it at the area. And then if you're embracing the KISS plan, it says that profits come at the first trouble spot, which means that on this trade, you got paid right there. And you were break even and you were out of that trade. Does that make sense, Alan? So why do I think you didn't take this trade? Because look at that. You said the 21 range doesn't support going short. 21 range had odds favorable momentum. That's the first thing I use a range chart for. But you're absolutely right here. On the 21, it's a pivot from nowhere. But you could have made a little money on that one. So, Alan, it's a great picture. It's great annotations. And guys, this really does just kind of reinforce what I say at the beginning of class and what I try to repeat all day, every day, is allow it to be simple. Focus on simplicity in the beginning. Get great at following a set of rules that require two charts, right? That are very clear, that are very pragmatic. And what you'll find is you're going to put yourself in a position to be successful. And then you can always expand from that area of simplicity. So Alan, great chart read. You had it, you knew it. You just didn't believe it, right? Because you gave yourself too much to think about. Been there, done that, my friend. Been there, done that. And guys, most of you are going to do it. Stop putting the pressure on yourself to be perfect. Zeba, termination, everything says up. I'm trying to figure out what you're doing here. It looks like you're trading directly into a termination condition without momentum. So I'm not exactly sure what you did there. Quick money, and then you take the trend trade look and get paid again. Zeba, that first one does not have a clear path. And again, Zeba, I'm just going to throw this out there. The bottom, you can keep it super tight, stretch it out. Make it easier to read, right? You got stopped out on the first one because you traded into a termination condition, most likely. Stretch it out. I know you like it, but when you take the picture, let it breathe. It'll be easier to do the analysis, right? Check this out, guys. Termination creates a full reversal. Full reversal gives odds favorable. Odds favorable provides me a 50-50 trade. No divergence, strong triggers, small window. If you entered the trade at the area, divergence messes up the party. Lady P, thank you for being here. Hopefully I can start seeing some pictures from you. Let's get you on the path. So Zeba, you broke the termination condition rule. It stopped you out. Then you let it clear and you made money. Isn't it crazy how that works? I think it's amazing, guys. You can trade into termination conditions. And you lose enough. You'll win enough to feel lucky, and you'll lose enough to start to respect them. Gary, everything says down. Strong trades on a 50-50 trade. And then at 9:52, you do get a market flow signal if you decide to take it. Notice that the close on the correct side of the small is the one that lets it run. For you NASDAQ traders, this is probably the greatest lesson you can ever get. If you get in on the first one, look what happens. Small triggers push it up. Divergence pushes it to the top of the window. A close on the correct side produces an effortless winner. It's not a rule, guys. There is no rule that says take a close on the small, the correct. This is me telling you that I've taken 100 pictures and I've seen it 1,000 times. And there it is right there. Safia, do you see it? Divergence. Daryl, when it closes, so when I say a close, learned hand, and guys, I'm telling you, let's say I'm waiting for a close on the correct side of the small triggers here. Obviously, it's not a trade. It means that this bar, let me take a picture. It means that this bar is going to reach that reversal bar marker. It's going to create a down bar that closes, and it's going to start to print a new bar. Guys, if I were looking for a short right here, and I wouldn't be because my rules aren't met, I wouldn't enter the market until 1150 because what I've found is that it helps me out. So there's two ways to do it, Daryl, is you can right click and you can have a sell stop right on that reversal bar marker that says if it comes down and creates a reversal bar, I enter the market on the correct side of the triggers. Or you can simply hit sell market when it happens. Guys, that's not a rule. My trend is up. My momentum is up. There is no way on God's green earth I'm going short here. Does that make sense to everybody? NASDAQ is amazing. And it creates an awful lot of opportunity. So Sophia, first one doesn't work, right? Hold it. Oh my gosh, you went short with everything up. Didn't work out for you. But then you kind of regathered and everything says up and you go long and then it works, right? Is there any reason to take this trade? What kind of trade was it? You were trying to take one of those momentum trades, weren't you? You were trying to take the John Novak momentum trade when a termination and strong triggers and there's those one-to-ones and you're like, ooh, yeah. So much so that you completely ignored all those areas of support. And guys, this is one of those things I got to tell you. I love my brother, but he's been doing this for 25 years and he sees things in an instant. If you want to take momentum style trades, you need to scroll back and you need to take pictures of them and you need to burn it into your memory. And the one part that's understood about termination conditions, guys, is that's your recipe for financial suicide, right? Has everyone seen John's best-selling book, Trading into Termination Conditions? Really works. Steve, you went long at 82 right there, or 842. So where she went short, you went long because of the termination conditions, because of the triggers, because of everything saying up. You said, you know what? That's probably just a little retest. Smalls are still above. I like it. Guys, that's chart reading. Steve, it's beautiful. But as a brand new user, you're not processing that fast, right? Steve's been with us for a while. Your trading plan will grow as you grow, but keep it simple first, right? Let's be successful simple. And then work our way into that next round of trades, guys. Gary, termination, pulls up, triggers don't follow, we're getting divergences. This arrow means absolutely nothing, and you said it's just noise. I love it. Great read, Gary. And then Abdul Aziz, right? Learned hand. Why is this just noise? Because the rules aren't met. Market flow is only your friend when the rules are already met on the other two charts. Great job, Gary. That is an awesome read and a solid way to stay focused on your rules. All right, Sophia, let's see what happens here. Termination, full reversal. We're starting to lose momentum, right? First loss of momentum with a clear path. You take the perfect entry. And then you get a lower divergence, right? So at that point, the momentum is gone. Two divergences, triggers are down. It may still go up, but look at those small triggers working against you. No reason to sit and hope. Beautiful trade. Sophia, perfect entry. You take a little bit, right? Exit with the second divergence because you're losing the momentum. Beautiful execution. Once again, guys, management is the second piece of the puzzle. Great entries, create manageable trades. That should be on a piece of paper in front of you. Great entries, create manageable trades. And then Safia, if you had decided to take your $100 profits on there was an opportunity for you to make some nice money before that thing turned around on you. Gary, 50-50, no divergence, smalls inside of the large. So you're saying I'm not fighting those strong triggers. Starting to learn those lessons, right? There's your close on the correct side if you decided to do it, but it doesn't go too far. It's a 50-50. Goes up, and then your trouble spot is exactly at target 1. You're absolutely right. So what I ask is, are your rules met for the entry on the S&P? And guys, this is what I want you to ask yourself. Were my rules met? Not did it win, did it lose? Were my rules met? If I have a termination that creates a full reversal, that gives me odds favorable, that provides me a 50-50, that has no divergence, and a small window of opportunity, were my rules met to enter the trade? Absolutely they were, right? So then you have to ask yourself, what was it about this trade that made me not take it? Were you nervous about something, right? Did you add something to your analysis that didn't belong there? That's the second half. Guys, checklists are only as good as your ability to follow them. And Gary, you put a lot of weight on this range chart midband, and I'm not sure why, right? So you said there were 2 areas that weren't broken yet, so you chose not to take it. I love it. I love everything about that, Gary. But this is one of those things, you say that a trade at the midband, why would you trade a midband outside of large triggers with the small triggers against it after it's coming off resistance with a reversal bar, right? I don't have any rules at all that reference the midband on the range chart. And this goes back to simplicity. I have everything that I need to take this trade right there on 2 charts, right? And I can put a checklist against it. And I know that I have to manage, and I know that my trouble spot is 1375 because that is the fib that isn't broken. Which means that if I get in at 11.25, I'm only making 2 points before I'm managing to a break even on that trade. Guys, checklists are amazing. Checklists are designed to keep you safe. Checklists are the thing that are going to get you into the market. Checklists only work if you follow them. The second you begin to insert your opinion, you're going to find that challenges present themselves. Daryl, let's see what you did. Whew. So 50-50 with a clear path. Not a clear path. So Daryl, let's go through just a little bit of, see if I can make that bigger. Let's go through a little bit of language. 50-50 can never be a clear path because the area is not broken. Daryl, are you with me? Not only Daryl, everybody, give me a Y if you're with me. It can never be a clear path because the area is not broken, right? So here we have strong triggers, 50-50, good top. I love it. This is a great look on your large chart, Daryl, and I love that you looked for your entry after those happen. So let's talk about window of opportunity. You had no divergence, and maybe this will help out just a little bit. So you had no divergence, right, is what you're saying, and I like it. But do you notice how you don't have any strength in your triggers? The smalls are still inside. You've had one divergence already from the area that may break or may not break. Daryl, if you had gotten in over here, probably a much better shot, right? Room to manage. Even if you'd gotten in right here, room to manage. By the time we get down here, your smalls are weak. And look at this. You couldn't even wait for a pullback. You were in before the reversal bar ever even printed. And your window of opportunity is that big. You have a huge window. with weak triggers on a 50-50. Does that make sense, Daryl? That's a good look. I dig it. This isn't. And this is where I use the language, my money is worth the perfect entry. And you notice that when you go to the checklist and you talk about that perfect entry, smalls must be outside the large. Guys, I promise I'm trying to give you everything you need to be safe. Daryl, great look on the large chart. The small chart would have kept me out of that one. And go back and look at your 50-50s. And guys, one of the things that you can do is after we talk about these looks and we talk about what happened, you can kind of go back and say, well, let me look at my last 10 50-50s that I didn't win. Is there a pattern that's repeating itself? Is there something going on? And you were in at 05 and you had to put 16 ticks of risk. And this is something that I want you guys thinking about too. If you're taking this 50-50 trade, if the area hasn't broken and the triggers are weak, is it worth $320 of risk hoping that it breaks? For some of you, it may be. But I think it was the right setup on the large chart, Daryl. I just think there were some challenges that happened on the smaller. All right, learned hand. Odds favorable, coming from a termination. But we're at a 50-50, right? 15,870 is a divergence high that hasn't broken, so we are trading into an area that may break. Are you with me so far on the 50-50 look here, learned hand? You entered with the market flow signal at 64. So you had a market flow signal up here, right? At an HVA line. Is that what got you in? Because down here at 64, you're fighting a reversal bar, the trend and the small triggers against you. Which signal got you in? Was it this reversal bar? Because that's a down bar. But let's look at it. 50-50 trade, right? No worries. I'm just lining up your entry on the chart here. I've got an entry at 70. Which means that that's the bar you used. I see it now. So that's great, right? You use the market flow signal. It generates at 70 or at 68, right at the HVA. And this bar corresponds with this area right here, 68. Are you with me? Cool. So let's talk about what we see on the grand scheme of things. Do you recognize that it's a 50-50? Because I noticed that you didn't write any rules on the chart. Yes, cool. So on a 50-50, if you've already had two divergences, if your small triggers are already inside of favorable large triggers, and your window of opportunity is from the highest point of support to the lowest point of support, how do you feel about that smaller, faster chart with two divergences, with weak triggers, with an area that hasn't broken? Learned hand? This is where a market flow signal should mean nothing to you, right? I've already given away too many advantages on these two charts. Why on earth am I going to let that range chart talk me into something where all of this has already gone wrong? Does that make sense? And man, I love that you're posting these pictures, because for me, this is an awesome, awesome opportunity for learning. And it goes back to what Ziva said. Sometimes we want to be in a trade so badly that we're going to allow it to cloud our decision making. And it goes back to what I was saying earlier. Guys, this should only come into play if the rules are met, right? And you just need that little bit of something, something to take a shot. Does that make sense, learned hand? Don't let it be an ugh, because this is a great, great, great thing. This is an awesome picture with an amazing lesson. And this is something that you can grow on. Oh, Daryl, losers are where it's at because we all take them. If you think you're not going to take a loser, you're mistaken. The key is to get feedback. What happened? What went wrong? Where did the advantages go wrong? And guys, I try to break down everything going back to this picture. And this is what I do. When I look at my charts, and learned hand, this may be something that you want to do. When I look at my charts, let me show you how I read my charts. I read my charts from left to right, right? The same way that I was taught to read a book, which means that I'm going to have my 13.2 here, and then I'm going to have my entry chart right next to it. Are you with me so far? Large chart, small chart, right? And then, that's not it. And then, and only then, I had to do this for my brain, learned hand, because what it did is it kept me focused on what's important. So then and only then, and I love this. Guys, I'm telling you, I'm not as smart as my brother. So I love teaching this class because I like to share with the things that work for me. This is my first stop, guys. This is where my eyes come, everything, right? If the rules are true, I'm going to give you guys this picture for my range chart users. It's so much bigger than it needs to be. If the rules are true, then this is my second stop. You guys cool with that? And then and only then will I go to a range chart. And guys, I'm going to show you how to use a range chart. When the rules are true, okay? The first thing that I'm using a range chart for is I'm going to verify momentum. So I'm not using lines, I'm not using midbands, I'm not using HVAs, I'm not using reversal bars, I'm not using signals. The only thing that I am using a range chart for is to confirm momentum, to have the exact same look that I have on my large chart. Give me a Y, you guys trying to incorporate range charts. This is the easy way. Confirm momentum, right? Because if you've got great momentum on all the charts, man, that's awesome. And then once I use it to confirm momentum, and I'm comfortable with that, and guys, I might do it for a week or two, right? I might take high probability trend trades and just look and see what does the momentum look like on my range chart when I take that trade. And let's go back and take a look. Here's a 50-50, no divergence, strong triggers, boom, boom, boom. What did it look like? I had odds favorable momentum, right? So I confirm the momentum. Do you guys see how that works? What happens on the second hit with divergence? I don't have the momentum anymore. It's gone, it's over, it's done. I never got a market flow signal. It's done. So let it confirm momentum before it does anything else. So if we scroll back, did we get another one? I don't know if we've had a lot of high probability trend trades. not so much. But guys, that's the first usage. Confirm momentum. But let the rules be true. Were the rules true? We had a termination that created a full reversal, right? The full reversal gave odds favorable. The odds favorable led us to a 50-50. That 50-50 trade had strong triggers, no divergence, tiny window. The rules were met right here. Does everybody agree with that? And since the rules were met, I didn't have to confuse myself with this stupid range chart. I didn't have to worry about it. It had absolutely no bearing on anything that I'm doing in life because my rules were met. I don't need it. And I'm saying that in Learned Hand, this may help. If you're looking at a range chart and you're giving it the exact same weight in the exact same spot as your large chart, then you're skipping a step, right? Something to think about, guys. And then you had a question under there about when you say for NASDAQ that we should not fight the small triggers. Can you expand on what that means? Absolutely. A lot of time retracement will reverse those triggers, especially if you anticipate a big drop after a divergence. Entered with a market flow signal. Oh, that was it. So you're saying that if I'm expecting a drop with divergence, right, Learned Hand? And I say don't fight small triggers. What does that mean? That means, and let's go back and look at this one. That was NASDAQ, correct? Oh, where'd it go? That's my untitled workspace. So where was that 50-50? It was right here. Was that it? 1051? This was your trade right here. Right, Learned Hand? So what do I mean when I say don't fight small triggers? Yeah, it was. That's your 50-50. There's your two divergences. There's your weak triggers, right? That's the same trade. So if you're still hell-bent on taking this trade, which, whatever, if you want to, that's totally cool. So check this out. What does divergence mean? Lower push, right? Are you with me on that? This divergence can also mean a lower push, but look at where the small triggers are. Here's the other part, and I try to avoid this one, but I'm going to share it with you. Do you guys remember when I talked about the gap theory? Learned Hand, are you comfortable with the gap theory? Guys, the gap theory says that on your large chart, if price breaks away from those trigger lines fast and far, a lot of times it snaps back to it. All right, here we go. More to think about, right? Guys, you're not keeping it simple anymore. This isn't simple anymore. You have to be able to do this as it happens in the moment, Learned Hand. Do you notice how I've got more than a full bar back to those small triggers? If those small triggers are likely to act as resistance, don't I want time to manage? Don't I want room to manage if they end up bouncing off of it? Absolutely. So I kind of use that gap theory on the small triggers. If my entry is here on a 50-50 and the small triggers are all the way up here and strong, I can anticipate a little pullback to them. But over here, after two divergences, do you see how there's not room to get back to those small triggers? Give me a Y in the room. My NASDAQ traders, do you see how there's not room to get back to those small triggers on that second entry? So when I talk about don't fight them, if they're against the trade and there's not more than a bar's worth of room to get back to them, sit on your hands. And then check it out, guys. There's your close above the small triggers right there. It keeps you out of that freight train of the small momentum, right? Of the fastest momentum. Learned Hand, does that make sense? Does that kind of clear it up for you? That's what I mean. So if divergence suggests a push lower and those small triggers are against, guys, this becomes a little bit of a safeguard. And let's go back to the NASDAQ and let's just see if we can find another opportunity where that was the case. Here's a 50-50 at the bottom at 1035. And I think this one had an awful lot of divergence, right? So there's your divergence that pushes up. There's your midband. And then there's your higher divergence. So that's not a great example. Here's your pullback with no divergence, everything down. There's a full bar to get back to the triggers, right? Do you see it? Not really fighting. There's that full gap to get back. I can manage. I have time. And then ultimately, I don't need to manage on that one. So learn hand, I think that kind of puts it into perspective maybe a little bit is this has a gap back to the small triggers. Guys, this gives me a little bit of breathing room. When there's not that gap back to it, it creates a challenge. So let's go back to 1011 and let's take a look. And I believe this is our first bounce. Pull back right to the midband. Small triggers don't follow, right? This is a great example. Learned hand, Abdul Safia Ziba. Everything says up and the path is clear, right? This one doesn't quite make the area inside. That's cool. And then we get a second divergence and weakened triggers, and we're saying this may push lower. And it may completely change it. Look how it bounced once off those small triggers that are against. Do you guys see it? It came to your midband, and then it bounced all the way up to small triggers that were against it. There wasn't a full bar. And look what it does. It pushes down a second time. We see this a lot. There's your close on the correct side, and that's when it continues off to that key Fibonacci area. So NASDAQ traders, give me a why. It takes chart reading in the moment. Odds favorable, no terminations. Guys, there's your pullback to resistance. Look how far away the small triggers are. There it is live in the NASDAQ. What a great example. For you NASDAQ traders, your entry was at 51.50, right? Comes all the way back to a trouble spot. The small triggers were outside. You had more than a gap, a full bar away. Isn't that awesome? Happens over and over. Good morning. All I see is the M. Who is that? Is that 10K? No. Mark B. Hey, good to see you, Mark. Long time. I hope so. All right, Gio, let's talk about it. $51.50? Haha, I'm with you now. All right, Gio, are you with me? Let's go through it. Strong bottom, triggers away. So not really a strong bottom, right? Your small smashed through, your large made it halfway. This is a turning point. It's a 50-50 that doesn't work down here. Not really a strong bottom. That is a good look for a strong top, Geo, when the triggers can't break, because now it's a termination condition that creates a full reversal. Does that make sense? And I want you to see something. Doesn't that look like that? Is it just me, or does that look like a termination condition? And Gio, this goes back to a picture that I shared earlier. Man, if those triggers are just eking through and barely making it, and there's nothing like just oh my gosh, they're smashing through. You're a 50-50 trade on a divergence high. You're a 50-50 trade on this resistance, but you're really not even 50-50, man. Those small triggers, see how that red fib is covering the bottom of that line? Geo, do you see how the small triggers didn't really clear resistance? And then you create the challenge of divergence, right? But even if you got in at divergence and you get in it somewhere down here, there's another divergence, right? That's two divergence on a 50-50 that barely broke. There's just no reason to jump in here at this point. It's hard to have advantages when things start going wrong here and things aren't perfect here. Does that make sense, Gio? I hope. Learn hand, you say that was a nuts reversal. So let's look at it. So we had strong triggers, right? Two divergences and weak triggers. And then as it pulls back up to the midband, learned hand, tell me what you think about these small triggers with two divergences. Are they strong against you? Could we say that that would be fighting them? And this is a great example. Large chart says giddy up to the downside, doesn't it? Do you see it? NASDAQ traders, give me a Y if you see it. Large chart says strong. Large chart says clear path, right? Two divergences on your small chart says that we're losing some momentum. Your small chart also says, look at those freaking triggers, and they act as support. And now just for grins, guys, there's your close on the correct side of the small. Two divergences, no reason to fight it. Large chart says go. Close from the highest point inside. And guys, it runs from 52. It hasn't stopped yet. Learned hand, does that make sense? Do you see how those small triggers said be patient? Do you see how two divergences say be patient? NASDAQ is a different animal, but if you just sit on your hands and wait for it, holy shnikes, there is so much money to be made. It wasn't even nonsense though. Do you know what this told you? Learned hand, this was the NASDAQ saying, hey, guess what? Two losses of momentum and weak triggers, hold for that higher area. Wait for the higher area. Don't fight these triggers. We're the NASDAQ, and this is a pattern that repeats itself over and over. Give yourself an advantage. It telegraphed that you needed to sit on your hands and wait. Did anybody take the close on the correct side of the small and make all sorts of money down to the target? Nobody did it? So what does that tell you? That tells you that you need to study these patterns, right? Because the NASDAQ isn't crude oil. The NASDAQ isn't the S&P. Guys, it is a rocket-fueled tank of emotion where we can still use our chart reading, strong triggers and clear path, but we're allowing this little nuance to give us a higher chance of success, guys. This is why we never touch the NASDAQ in this room. I never even had a NASDAQ workspace in this room, but because so many people wanted to trade it, I started doing the study that you guys should have been doing, right? And this is what we determined. And guys, if you got in at 50 even, if you got slipped at 50 and got out at 34 on a two lot, that's 32 points. That's $640 with just a little bit of patience. And then it goes straight to the termination condition with weak triggers. And some of you took this short because you were mad as hell that you didn't catch this one. And the small triggers are coming up and there's a second higher divergence, and sure enough, it pushes higher, right? But rule number 2 should have kept you out anyway. Does that make sense? So for you NASDAQ traders, guys, that's your secret right there. Don't fight the small triggers on the 13.2. Let the large chart lead the way. Is that helpful for you guys? I hope so. Sometimes I say things that make sense to me because I've taken 150 pictures of it, right? Two divergences, weak triggers. Awesome. Guys, I'm telling you, we're going to get there together. Ziba, there was a 50-50. Did it have... Looks like you made money on it. And then everything reverses. There's your pullback. And you make money on it. And everything says down. Two divergences, but you let it go to the higher area. Stop keeps you safe. Why did you close? Because of the second divergence potential? That's okay. One thing you can do, Ziba, is instead of showing me 8 pictures, you can still stretch it out and just show me the one. So there's your entry low, right? One divergence, it's low, you get in. You're not with the second divergence, you make a little money, and then it pushes up, and then it finishes the move, yeah. There's a lot of trades in there that we haven't gotten to see, though. And guys, look at this. Termination creates a full reversal. Let's just go live, right? All the way to the termination condition. We can understand where the market is likely to go. Termination creates a full reversal. Full reversal provides odds favorable. I'm a 50-50 look, right? Smalls are through, large are not. Everything's strong. No divergence potential yet over here. Can I put an order at the top of the window? It's 50-50, right? Let's talk about how much risk I have to have on this trade if I take it. So that's 8. That's 160. That's about $180 per contract if I get in at the top of the window. Is that an acceptable amount of risk for you guys on a 50-50 trade with 1, 2, 3 areas that aren't broken yet? Only you can answer that question. But do you see how quickly that happens, Safia? So now, if I'm saying there's 3 potential areas where this trade may come from, and I'm waiting for market flow to give me an indication, my analysis is already done. Then I can go to market flow and wait. So there's a divergence on a 50-50. How do we feel about it? Does anyone have a checklist that says not my trade? Or do you have a checklist that says with one divergence, I'll wait for a market flow signal? That's up to you, right? Let's see how this one works out. There's one divergence. I haven't reached an area. My small triggers are a full bar away. You look at the small triggers when you see a divergence. I love it. So right now we haven't reached support yet, right? We're not inside of that window of opportunity. Guys, let's just talk it through. There's our window. Never really made it, not yet. Let's see if those small triggers act as resistance. It didn't make the window, which means the rules weren't met, which means that it wasn't your trade. So learned hand, doesn't this look familiar? You showed me this picture earlier, didn't you? Do you remember this look, learned hand? Price retraces all the way back up to the small triggers, and then it continues to move down to a potential entry point. Holy smokes. There it is again, guys. And now we're coming down. We still haven't reached support inside of favorable large triggers, so I'm sitting on my hands. And now I've reached support, and my small triggers aren't a full bar away. Let's see what happens. Nice job, Ziba. Congratulations. Do you see how I can use that reversal bar marker? They're right there. So there's just about a full bar. Let's see if it goes up and taps it. Certainly did. And now we make a decision, right? That becomes your point where you've got to make decisions. So if you're in at 42, that's over $100 away. Does that make sense, everybody? And look at that. It's still fighting. It's still fighting those small triggers. There's a second divergence. Let's see what happens. The small triggers are down. They're well below the reversal bar marker. Guys, this is NASDAQ. If this one goes, my rules are broken. This isn't my trade, right? And you've got to be okay with that. You've got to be okay with the idea that if your rules aren't met, it's not your trade. Termination that creates a full reversal ultimately wins. I might have been in about right here, but I would have managed out with the second divergence. That's the way mine goes. But you have to have rules, right? I don't want to guess. I want it to be clear cut. I go under the assumption that I'm not smart enough to make things up on the fly. I'm not smart enough to make decisions based on my emotions because my emotions are going to mislead me every time. So it has to be pragmatic. Guys, there's that clear path again. Mine says if there's a divergence, I just don't take the trade. I have to wait for the clear path. Does that make sense? Does that help at all? These can act as resistance, right? And then you can gauge advantages as they go away. And sometimes it's just going to go without you. My rules say there's 3 divergences in the same place. My rules say that my areas for entry are fibs, mid bands, and 1-to-1s because 25 years of Nexgen study says that those are the areas most likely to get it. So learned hand, you got in, and then you got out. Then if it's nonsense, learned hand, why on earth are you trading it? Does that help him? Fibs, midbands, yellow 1-to-1s. If it's nonsense, why are you trading it? Wouldn't that be considered nonsense? It's not nonsense. You just haven't learned how to trade it yet, right? 3 divergences in the same location say potential termination condition, right? That's a rule. That has nothing to do with the market. 50-50 says that if divergence prints, it could screw it up. That's a rule. That has nothing to do with the market. The only difference on the NASDAQ, so learned, you had confidence it would reach 856, right? Let's talk about that. And let's talk about what that really means. And I'm not beating you up, and please, if it feels like I am, I apologize. You had confidence that it would reach 856. Why? Because that's where you want it to go, right? So let's change it for what it really is. Why were you confident? Because that was your hope. I can't even spell it. That's how much I've taken it out of my trade. You say there was nothing in the way. I disagree. When you took that trade, that area hadn't broken. That area hadn't broken. And that area hadn't broken. You had 3 areas that the large triggers hadn't cleared yet. Does that make sense? So absolutely, there was a lot in the way. There were 3 areas that hadn't broken yet. 3 areas that had not turned into a clear path. That's okay. And you've got to, right? And that's okay because we talked about this the other week, learned hand, because you're saying price hasn't reached this area. And I think you're 100% right. And I don't remember who it was, but it was the exact same thing. Because price hadn't reached this area up here yet. what kind of happened is they didn't factor in that the large triggers hadn't broken these previous areas yet. So we're still on a 50-50. Does that make sense? And I think what we have here is a huge aha moment. This is a target, right? If the rules are met for entry, but because these haven't broken yet, these divergences screw up the party. And let's see what it did. Now my 1-to-1s are the only area that hasn't broken. And I still haven't reached this one. But I've had 3 divergences, right? My smalls are on the wrong side. It's just ugly over here. The rules are designed to keep you out of the ugly. If you took the first trade, if you took this trade right at the midband, that second divergence probably took you out, right? But on 50-50s, don't confuse confidence with hope. You hoped it would go to 86, and you hoped that these areas would break, but your small chart said, you know what, you're just going to have to be patient. You're going to have to be patient. Your small chart's letting you know. 50-50 with divergence. So you waited for a close above the small triggers, right? So one thing that you run into here, Alan, is your areas are all the way down here, right? And it's still a 50-50. And it still has divergence. Does that make sense? Guys, the close on the correct side of the small isn't a guarantee. If your triggers are so far away that you have to add 7 points of risk for a close on the small, that may not be your trade, especially when these areas haven't broken, right? And why have these charts if you're going to ignore them? What did these charts say? This says pivot stop out with a reversal bar. This one says everything is down. Smalls are below the large, right? Why bother going long? So, and this is, we had this talk last week. If this isn't perfect, this should be. Does that make sense, Alan? If your 34.5 isn't perfect, this should be. That's pretty simple. So let's go the other way. If you're 55, I have no idea why you have this. If your 55 isn't perfect, shouldn't this be? Does that make sense? If your 34.5 has a challenge, your 13.2 should not. If your 55 has a challenge, your 34 should not. It's the exact same concept, just going up higher time frames. So for the rest of you using these higher time frames, does that help a little bit on 50-50s? This was a 50-50 here, right? But it was also a 50-50 here. This wasn't perfect. This should be. This wasn't perfect on your largest chart, but it was on your 34. See how that works? Not perfect here. Sophia, there is no we. You do whatever you want to do. I don't use them. I don't use them because I think it's too much information. If you're going to use them, make sure you understand how to use them. But so far today, I've seen a lot of bigger time frames, and I've seen them misused every time. So we're good. Shogun, are you with me? All right, Shogun, what's a high probability trend trade? Let's go through it. You ready? A high probability trend trade is momentum, a clear path, in an entry area. Are you comfortable with that? Can we take a picture of a high probability trend trade? It's simple, right? The high probability trend trade is the easiest of the easy. It is the highest probability. It's the best of the best. It's everything agrees, right? It's the one. It's the one chock full of kickassery. It's the one that gives you the highest chance of success. That's the wrong picture. I thought I had it. Let me pull it up. You ready? That's your high probability trend trade. Everything. Go, go, go. I love it. What's a momentum trade? It's not a high probability trend trade, is it? It doesn't necessarily. Oh, look, 50-50 with divergence. Let me know how it turns out, guys. So let's go straight to the rules, Shogun. And guys, this is why I believe, this is why it is my loving opinion that if you're not taking the high probability trend trade successfully, the odds aren't necessarily in your favor for understanding the momentum trade. Okay, so I'm going to go to the trading rules. And I'm going to go to the momentum trade. And notice that it's the last one here. So rule number 1 says a good top or bottom. Shogun, a good top or bottom means a termination condition on your large chart, right? It has to mean a good termination condition on your large chart. Your high probability trend trade, ladies and gentlemen, teaches you to recognize termination conditions. It teaches you to embrace the idea that if the trigger lines don't go through an area, it's likely to stop it. And if they do, it's no longer a good top or bottom. So that's rule number 1. Trigger lines do not go beyond the Fibonacci area. Rule number 2 says don't trade directly into a termination. So once again, your high probability trend trade teaches you to recognize these terminations. So not only do you have to come from one, Shogun, but you can't be trading into one. Does that make sense? So far, so good? And now here's the difference between a momentum style trade and a high probability trend trade. And it has everything to do with entry. Your rules for entry, you have to have an area, right? Pinpointing the entry area involves looking for a specific indicator, such as Fibonacci lines, mid-band, or one-to-one levels that are positioned inside the smaller chart, small triggers. This identified area will serve as your entry spot. Utilizing this technique will define the entry area for each trade. So when we're looking, oh my gosh, look guys, 50-50 with divergence. Oh, strong triggers. Great googly moogly, it happened again. All right, so the momentum style trade. Shogun, I'm looking for an example and I just don't see one. Give me a second. I'm going to see if I can find one. See if I can find that termination. No. I'm hunting, I promise. Well, it's just not giving one. Let's see what Discord has regarding the thing. But the first 2 rules are pretty solid, right? You have to have a termination. Price reaches the area. No trigger lines break through. And then the momentum that we're looking at, guys, for this first momentum trade, Shogun, is your small triggers are down and they are strong as all get out, right? Separation, down, strength. No divergence. Small triggers have to be strong below the area. That's it. Triggers define momentum, don't they? Isn't that the first lesson that we talk about every day? Is that trigger lines define momentum. Trigger lines, that's their sole purpose in life. And look how with all the momentum from a great termination, it does a quick little spike back, right, to that area, and it becomes an opportunity for continuation. Guys, you're going to screw this trade up 1,000 times. Because you're going to say, oh, look, there's a termination, and here's an area, but now I have divergence, right? 50-50 on a divergence. And you're going to try and take a momentum style trade. If there were a momentum style trade, guys, it's going to happen close to the area, and it's going to happen on a quick little pullback right there. Does that help a little, Shogun? It happens quick, right? And then once it's gone, that one's over. The momentum style's over. Now we go to our trend trade rules. And what do I have? I have a 50-50 with two divergences, and look at the small triggers up and strong. Can I get a hallelujah here, guys? How many times do we have to see this pattern before we go short at this midband, hoping shit works? Pardon my French. Hoping stuff works. I worked real hard on studying this pattern because, guys, do you want to know which trades I lost over and over and over and over again? It was this darn midband fighting those triggers, and I get run over. Your rules on a 50-50 should have kept you out anyway, but if you're a fighter, you still haven't had a close on the right side. But can't we agree that your rules aren't met anymore? The smalls are up, the large are down, the areas haven't broken, and it's just ugly. Do you guys see it? So guys, what I want from you, just something to think about, is I want you to embrace the idea that it doesn't have to be difficult. It doesn't have to be overthought. It doesn't have to be 1,000 rules on 1,000,000 charts, doing all this different stuff. The only reason that I say simplicity in the beginning is because I want you to be a chart reader, guys. I want you to be able to understand where the market is likely to go. And how are you going to do that? You're going to do that with momentum. And when the momentum is its absolute strongest, then we're going to look at Fibonacci off in the distance where the market is likely to go. I want you to embrace the high probability trend trade so that you can be a chart reader and identify where the market is likely to stop. And guys, this is going to keep you from taking trades into areas that may reverse the market. And then finally, you're going to take that and you're going to understand where the market is likely to continue. And these are your entries, guys. These are your entries that you're taking with the advantage of momentum, a clear path, and an entry area. And if you give me 30 days focused on a high probability trend trade, 30 days focusing on these advantages, 30 days of pictures in the room, flooding each and every chart with questions about what you don't understand, by the end of that 30-day, if you're catching the high probability trend trade, you've put yourself in a position to take a trade that typically wins 70 to 80% of the time. A trade that offers confidence through the memory of success. You will not have $1 million job as a day trader in your first week. Stop trying. Build the foundation, ask 1,000,000 questions, and guys, there's nobody in this room that isn't capable of getting to where they want to be, but everybody in this room will tell you that simplicity typically yields results. And when they stray from the plan, when they begin to trade emotion and hope, stuff goes wrong, myself included. And guys, this is Nexgen education. In order to get to where you want to be, you need feedback every day. The only way you get that is if you ask questions. Did anybody leave here with a little more clarity? For you NASDAQ traders, did anybody leave here with a little bit of extra, hold it, I've got one more thing in my arsenal to make me stronger. Guys, my brother and I say the exact same thing. We say it very differently, right? Tony, we're going to go over it every day. Every day we're going to go over it. But until it's second nature, doesn't it make sense to keep it simple? Doesn't it make sense to embrace? Debbie, I see you typing down there and I realize that I missed your picture. And I absolutely refuse to end class with a missed picture. Guys, you have to tell me if I mess up. I hate to admit it, but I'm human. I'm going to find that picture. Here we go. Debbie said, I am waiting out the 50-50. Debbie says, when a termination creates a full reversal, odds favorable, she takes the best entry with no divergence. Divergence prints, and she makes the decision to stay into it. And then she says, oh, things are changing. I'm taking some money. How did that one work out, Debbie? Made $100. So you're saying that multiple problems on a 50-50 took away your advantages? I love it. Shogun, why are people trading NASDAQ? Can I give you the real answer, Shogun? Guys, you're going to hate this. Most of you are going to hate this answer. Who cares what everyone else is doing? Not one of you has ever paid my light bill or my car notes. Not one of you offered to put my kid through college. I don't care what everyone else is doing. I'm concerned about me. So Shogun, the question should be, if you're trading NASDAQ and you're not consistent on anything else, why are you trading the NASDAQ, right? Does that make sense? 2K from 7 to 11 p.m. trading the ES, and you can focus more on setting up properly. Shogun, if I was making $10,000 a week on one market, the only thing I would do is increase contracts. Because if you're doing that on a 10 lot, right, why not do it on a 20 lot and double your profits? Guys, just something to think about. Debbie, I had the most amazing vacation. Did you see the picture I posted earlier? It's my favorite picture. So guys, John Novak took the class last week because I went to Banff, Canada. Look at that. That's not altered. It is unbelievable. Guys, this has got to be on your bucket list. Oh, St. Thomas, 40 years? Congratulations. Mine was 25. Reminds you of your backyard. Johnny Rocket, I'm coming over for a barbecue. This was Banff, Gary. So it was, I don't know, I think it's 100 miles outside of Calgary. Oh my gosh, it was unbelievable. Unbelievable. I highly recommend it. It was beautiful. And from where I'm at, it's only 8 hours. So it wasn't a super far drive. Guys, that's our classroom. Any of the couple? Maybe. I don't know. Here, we'll go to Instagram and we'll look at my wife's Instagram. She put pictures up. That was Glacier National Park. I don't know if she put pictures of us. Guys, you're so welcome. Isn't that beautiful? That's in Montana. And no pictures of us there. I don't think that my wife wanted to put pictures of us up. She's like, no way. He's got a face for radio. She's not going to show the world. Pretty awesome. We'll see. Guys, thank you for being here. Thank you for saying you missed me. I was thinking, man, they're going to get John and they're never going to want me back. It's all about simplicity, guys. It really is. I want you to embrace that. New users, do me a favor. Embrace simplicity. Get with it. Oh, my brother, I love my brother has taught me more than I'll ever teach you guys. He's amazing at what he does. But my brain works closer to a new user's brain because I'm closer to being a new user. So there's a lot of pitfalls that we can do. And for you new users too, just because, yeah, we're just different. Just because you are here, I want to remind you, new users, um, here's my contact information. Guys, feel free to reach out. I know that it's intimidating to post in the room initially. Feel free to get me on Skype. If you do, go, hey, Mark, I'm in the class. I have a question. Otherwise, I'm going to assume you're somebody that wants me to go to your OnlyFans page. Apparently, there's a lot of spam that does that. Or just email me and go, hey, Mark, I had a question about this. I was a little shy in class. And I'm going to encourage you to post in class, but I am available to you guys. So do me a favor and don't be shy if you have questions. Reach out. There's no doubt in my mind, this is the greatest software in the world. You just have to learn to use it. And that's my job. My job is to help you learn how to use it. So with that being said, have an amazing afternoon. I'm going to get back into trading. I haven't traded in a week, so I simulated this morning. Keep it easy. I'll be back tomorrow morning at 9 a.m. and we're going to do it again, guys. Thanks for being here. I appreciate it. You're trading the edge. All right. As long as you have rules for it, Ace J. That's all I ask. Be good, guys. I'll see you in the morning. Hey, Zeba, I may be in your neighborhood soon. Methodist Willowbrook is courting my wife right now. We swore we'd never go back to Houston, but it's the perfect stepping stone for her career. So we'll see. We'll see what happens. No, I don't care. I can be happy anywhere. Have you met me? It is hot. It means I get to golf. Hey, Jose Trades. Got a question for me? I'll hang out for a minute, guys. I got nothing going on. Let's talk about what you need to talk about. Yes, there are, and I will too. I'd be excited because I don't have to wake up at 5 anymore, right? Dude, so Ace J, you're still new. You don't realize this. I've taught this class from Houston, from Austin, from Dallas. I've taught it from outside of national parks at Big Bend, White Sands, up and down California, Oregon, Washington. I've taught it from hotel rooms. When you do what we do, you can do it from anywhere. Um, and that's a big thing. But focus on the process. Guys, don't tell yourself that you want to be rich. Tell yourself that you want to be consistent. Don't tell yourself that you want to make $1 million. Tell yourself that you want to take the trades that give you a statistical advantage. Don't tell yourself that you want to make X amount of dollars. Tell yourself that you want to execute flawlessly so that you can have the best chance of success. And you'll be amazed at how things work out. Have I taken what is supposed to be one of the best roads in Oregon? Which one is that, Jose? Because in Oregon, there are so many beautiful roads. There is the run on 90 that goes through the gorge from Oregon to Washington. That is spectacular going to Washington. It is unbelievable going back to Oregon. From Portland to Bend is spectacular. Anything that takes you through the Cascades is amazing. Anything that takes you from the valley to the coast is amazing. I really thought Oregon was the most beautiful place I'd ever seen in my life until I went to Banff, Canada. And it changed everything. Canada is unbelievable. Just so spectacular. I can't wait to go to the other side of Canada to check it out. So guys, that's it for me. Thank you for being here. Thanks for playing along. I'm so happy to be back. And we'll do it again tomorrow, guys. Everybody take care. Go follow your rules this afternoon. Bring me some pictures tomorrow. Take care, everybody.